All right, good afternoon, everyone. If I could have your attention and we can all get seated, we are about to start Chile's 14th Annual Global Trade Symposium. Thank you all for coming. If we can all get seated so that we can start, I would appreciate it. Thank you so much. All right, so as we get situated, good afternoon, everyone, and welcome. My name is Nicole Marin. I am Chile's Director of Programs and Internships. Before we start today's program, I just have a few items I would like to discuss with you all. First, we ask you to help us share the speaker's point of view as well as your own. So please be sure to follow us on Instagram and on X at the CHLI. If you didn't get that, it's at the CHLI. Secondly, after each panel discussion, there will be time for questions and answers. So please make sure to wait with your questions and bring them forward at that time. There will be people from the Chile team with a mic on every end of the room. So just raise your hand, stand up, and a member of the team will get to you and you'll be able to ask your question. The discussions, including the questions and answers, are being recorded and they will be uploaded to our YouTube channel at The Chile, same as our social media handles for Instagram and X. So you may view the program again later and share it with others. I encourage you to do so. Now, to kick off the program, I'll pass it on to Chile's President and CEO, Ms. Marianne Gomez Horta.
Thank you. Thank you, Nicole. Thank you, everyone, for joining us this afternoon. Buenas tardes, bienvenidos. This is still Happy Hispanic Heritage Month. Yay. So welcome everyone to the 14th Annual Global Trade Symposium. The Congressional Hispanic Leadership Institute is the premier organization founded by members of Congress to advance the Hispanic community's economic progress with the focus on social responsibility and global competitiveness. Founded in 2003, Chile is a 501c3 nonprofit and the only, I love saying this part, and the only bicameral, bipartisan, Hispanic-led and Hispanic-serving nonprofit based in Washington, D.C. Chile is dedicated, you don't have to be shy about clapping, just for the record, okay? Just for the, and everybody, we're here to cheer everybody on. Chile is dedicated to fostering a broad awareness of the diversity of thought, heritage, and interest and views of Americans of Hispanic and Portuguese heritage. I would like to recognize a few people before we start this discussion. First, as always, you have to thank the bosses in the house. So I want to be able to recognize not only is she the host and the chairwoman of our organization, but the Honorable Ileana Ross-Layton, who's our chairwoman. Sitting next to her, another board member, Daniel Diaz-Balart. Thank you, Daniel. And on the other side of the house here, Isaac Reyes with Target. Thank you. We also have what we call our dream team, also known as the Chile Global Leaders, with us today. They began their internships on the Hill a month ago. Just a little bit of an exciting time, don't you think, for them to be here? They're going to be transitioning in a couple of weeks to their corporate placement. But if the interns can please rise to be recognized, they're all interning on both sides of the aisle. And if you're interested in learning more about the internship program, you can go to the website at chile.org. You can ask one of these interns here or take the time to reach out to Nicole Marin in the back in the room. And if you're joining us via live stream, all our emails are on the website. Thank you again for the global leaders for being here. A special thank you as well to our sponsors. You know, none of this is possible without our sponsors. Please join me in recognizing our sponsors: Amazon, Coinbase, Mars, ServiceNow, Target, UPS, Walmart, and of course, today's host, Akin. Thank you all for your support. I also want to thank the Chile team here today. And I do this at the very beginning because I've tried to do this at the end in other programs, and half the time I'm so excited to end the program, I forget. So we're going to do this now. So thank you to everyone that you've seen that's been part of the hospitality, the team and the volunteers and the team here. Nicole, Bree, Angela, Sophia, Tia, Maite, Bruce, Andres, Emma, Stephen, Daniel, Isa, and Mercy. And a very special thank you, yes. And a very special thank you to a dear friend who told me not to mention his name, but I'm going to do it anyway because I always believe in saying thank you and naming the name. So Pastor John Casas with ASAS was able to help us to bring in volunteers. And so I want to thank them. You saw them as you came in. So a special thank you to Pastor John Casas and the students of his church. Thank you. Now I would like to introduce our chairwoman. The Honorable Ileana Ross Layton was the first Latina elected to U.S. Congress, where she proudly served from 1989 to 2019, including as chair of the House Foreign Affairs Committee. Born in Havana, Cuba, she built a legacy of leadership in foreign policy, Hispanic representation, and supporting women in public service. She now serves as Senior Policy Director here at Akin and continues to champion Hispanic leadership as the chairwoman now of the Congressional Hispanic Leadership Institute. She started the organization along, as she mentions, with former Congressman, the Honorable Lincoln Diaz-Balart, and current Congressman Mario Diaz-Balart. So with that, the chairwoman, please. The floor is yours, ma'am.
Beautiful, beautiful. Muchísimas gracias, Mary Ann. Thank you so much to all of you for being here. It is such a pleasure to welcome you all to Akin, where I work for CHLI's 14th Annual Global Trade Symposium. As many of you know, because you've heard it before, I am proud to serve as a Senior Policy Director here at Akin, mainly because I'm a senior citizen, so the title is very apropos. And I also serve as the chair of CHLI, and I like them both equally well. I want to recognize that today's discussion takes place, as Mary Ann said, because everything I said, she's already said, during Hispanic Heritage Month. And thanks to the many opportunities available in this great country, I became the first Latina elected to Congress. We didn't use the word Latina at that time, Hispanic woman. So this month for me holds very special significance. It is a time not only to celebrate our culture, our traditions, our contributions, but also to highlight the ways in which the Hispanic community continues to shape America's role in the world, especially in areas like trade, investment, and economic development. This year's theme could not be more timely. Trade policy at a crossroads, strengthening opportunities for the Western Hemisphere. Wonderful, wonderful topic. And we know that global trade is shifting rapidly with new pressures on supply chains, changing consumer demands, increasing competition from other regions of the world, et cetera, et cetera. And we must seize this moment to strengthen our cooperation, build resilience, and ensure that trade remains a driver of prosperity for our communities. So thank you again to CHLI, muchísimas gracias, to our distinguished speakers, and to all of you for joining us here today. I used to look like that. I need to update that photo. I got a few more wrinkles, and yeah, I was looking good then. Wow. So, but Mary Ann and I think you know that today's conversation will give us plenty to reflect on as we continue to build on even stronger ties across the Western Hemisphere. Así que muchísimas gracias a todos. Let the show begin. Gracias, Mary Ann. Yay.
Okay. Okay, so thank you again to our chairwoman. I would like to take this time now to introduce our keynote speaker, the OAS Secretary General, Albert Ramdin. Albert Ramdin was elected Secretary General of the Organization of American States, the OAS, in March 10th of this year. becoming the first leader of the organization from the Caribbean community member state. A seasoned diplomat with more than 3 decades of experience, he has held senior roles across the OAS, the Caribbean community, and the government of Suriname. From 2005 to 2015, he served as OAS Assistant Secretary General, advancing Hispanic, and I just added the Hispanic into the hemisphere, dialogue and cooperation. Later, as the Suriname's Minister of Foreign Affairs, International Business and International Cooperation from 2020 to 2025, he strengthened regional and global partnerships, including initiatives in trade and sustainable development. Born in Suriname in 1958, Secretary General Ramdien studied human geography at the University of Amsterdam and development geography at the Free University of Amsterdam. Fluent in Dutch, English, and Spanish, he brings both academic rigor and a multicultural perspective to his leadership. His current mandate at the OAS began on May 26th with a vision centered on inclusion, democratic renewal, sustainable development, and ensuring that the OAS serves all its member states equally and producing tangible results. With that, please join me in welcoming to the podium Secretary General from the OAS. Thank you. Thank you very much. The floor is yours, sir.
Thank you. Good afternoon. It's great to be here. And let me immediately share with you something which just happened in New York at a UN Security Council. And that is that the resolution which the United States has proposed with regard to the gang suppressing force resolution was adopted. 12 in favor, 3 abstentions, 0 against. So this is great news for us and for Haiti. Now we can begin a new phase to support the country. That's not why I'm here, but I thought it was important to share with you because a lot of work went into this. Just a month ago, we did not know that such a resolution would have been passed. And I know there's a lot of people who have worked on it. First of all, thank you very much for inviting me, Chairwoman Ross Lehtinen, and Marianne Gomez. Thank you very much for the introduction. I'm happy to see Roger Noriega here as well, and Mr. Ballard, your uncle, is very supportive. Let me put it that way. Let me put it that way. My colleagues from the OAS and all of you. I'm happy to see young people in the room, majority. Somehow it's a bit separated. The young are that way and the older are that okay, but I don't know if it's left and right, but okay. I know I don't have half an hour, which I will need normally, but a couple of minutes. I want to put some highlights here. One is we live in a very challenging global context in a different world. We all know that. It's regrettable on the one hand to have 2 open wars in 2 different places. Regrettable in the sense that the lives which are lost, also the way it happens, because in today's world we can see those happening in real time on our smartphones. So I hope that peace will prevail and that restraint will be demonstrated and that somehow the political leadership of the world, the larger countries can find a way forward. It's not good for nobody in the world. Nobody. It has an impact on our economies. It has an impact on social life. It has an impact on politics. But we have also very different hemisphere, Western Hemisphere, much more complicated, much more complex in the sense, the time that Roger and I served at the OAS some 15, 20 years ago, it was easier to manage, I think. We felt then it was complex. Today's world is doubly complex. But it's exciting. I'm upbeat. I laugh and I smile simply because I believe that better times can be achieved if we all work together. So I work with member states. I listen to member states. I hear them. We cannot do everything what member states want because our resources are not that large. We are working to get those resources up, but there's a lot that can be done in the Western Hemisphere. I'm not going to speak about the global scene and all the geopolitics, and some of it impacts us as well. But I think there are a couple of things I need to say. One, we have to believe in our Western Hemisphere, in the Americas. We have to believe in the region which is the safest in the sense of open conflicts for many, many decades. We don't have wars. It's a zone of peace, an hemisphere of peace. We want to keep it like that. So this is, again, asking countries who have issues with each other to be diplomatic, to negotiate, to consult. I was in Belize recently. There was an incident, and I was so pleased with the way both leaders from Guatemala and from Belize found a way to say, let's not focus on the incident itself, but let's focus on being wise and looking to the broader context of peace, stability, and negotiated settlement. That was on the border issue. There are many countries, Venezuela and Guyana, again, restraint is important. We don't need open conflicts. And why I say that? Simply because of this. And this is our vision for the OAS. There are two agendas which we drive. One is a peace agenda, and the other one is a prosperity agenda. And those go to the heart of what the OAS stands for: democracy, human rights, economic development, and security. But it is about peace and prosperity. That is what the people of the Americas want. They're not interested in all the political gaming and the politics and so on. What they want is a secure environment to live in. They want a future for their children. They want a steady income, and they want to stay in their natural habitat where they used to live for many, many decades. Nobody wants to leave a place. Regretfully, it's not always like that. So, but I see opportunities. And why? Let me give you a figure here. Latin America and the Caribbean, we have almost 50 trade agreements signed among ourselves, also with partners outside the region in the past 15 years. That's a lot of arrangements made. But at the same time, the intra-regional trade within the Americas, and when I say Americas, I mean North America, Central America, South America, and the Caribbean. It only accounts for 15% of total trade, 15%, 1-5. Compare that to Asia, 55%. Compare that to Europe, 68%. So here you see a challenge, but at the same time, we see an opportunity. But it means that there is growth potential. But it will require a lot to get everybody on the same page. Our focus, our leaders' focus, and I speak publicly and openly about this, and I don't mean anything negative towards leaders, but we cannot keep focusing on division, on what divides us. We must focus on what unites us. This is a very diverse hemisphere. We have the Caribbean with its own developmental problems, climate crisis, whatever you want to call it, environmental issues. We have Central America with enormous security issues and development issues. South America with its own nation building and strengthening of their democracies. North America, Mexico, Canada, and the US with its own geopolitical issues. The hemisphere is not homogeneous. We are different. But in diversity, I see a richness. I don't see a conflict. The thing is, we have to cater as an OAS for all these regions. And that is an interesting gameplay because we need to make sure that everybody feels happy in the OAS. And that can happen. So when we speak about the peace agenda, what do I mean by a peace agenda? It has a couple of elements. And it goes to the core of the OAS, strengthening democracies. It is working on electoral systems to make them work better, making sure that representative bodies, parliaments, congresses, audit agencies, state institutions function effectively, that we have an education system that caters for everybody without discrimination, a health system that provides care. That is the kind of society we want, a society that is just, fair, and with opportunity for all. That is the peace agenda. And we do a lot already on this, okay? Multilateralism, I know there is a lot of skepticism, but I can prove that it is not true. The skepticism is not grounded in reality. The problem is we haven't told the story. So those who are skeptical, I can understand that. And I see also the need for demonstrating to those who put a lot of money, invest a lot of money in the OAS, that they want to see value for money. It's a good principle. I support that. But we will have to show the narrative. We will demonstrate that the OAS is useful. If the OAS did not exist, we would have many, many other problems in our hemisphere. Absolutely. So we must invest in the OAS, but the OAS needs to also demonstrate its value, its usefulness to the member states. And that's what we're working on. So the peace agenda is really about creating a better society with opportunities for especially youth and marginalized communities throughout. Today, with technology, we can reach everybody in each country. We can provide education and healthcare. Well, let's invest in those things. And I don't mean invest in the context of commercial investment, policy-wise. Let's make sure that the people of the Americas feel that governments care for them. In my view, politicians need to really take a serious look at how they do business. And I don't think I should hide that because it's my duty to tell you the story as it is. Now, the prosperity agenda. We work on both at the same time. We can't separate them, but these are two different. The prosperity agenda has to do with exactly the 15%. There is enormous growth potential in our hemisphere. There is enormous potential in terms of rare minerals, in terms of mining, in terms of even a market size. Together, the whole hemisphere is approximately 800, 900 million people. That is twice as much as Europe. And we are still far less developed than Europe. How is that possible? It's simply because we do not know each other. We do not know what the opportunities are in each other countries. We go for holidays to New York or to London or to Canada, but we don't go down to Buenos Aires or Lima or Cusco or whatever. Or they don't come to the Caribbean. They prefer to go to Miami, for instance. These are traditions which we have to break. We have to invest in our own region. So that means we need to know each other better. I call that connectivity. Connectivity in 4 ways. We need to connect the people of the Americas, the youth of the Americas, more exchange programs between universities, more students going on summer leave to different countries, programs that will provide that. For that, we need to make sure that people go as tourists to different parts of South America and the rest of the Americas. We need to make sure that the connectivity by air is strengthened, the connectivity by sea is strengthened, and the digital connections. 4 connectivities, and we can achieve that. But again, it requires a program. It requires member states to adopt these objectives, and it requires politicians to put their weight behind it. We're going to appeal to them by the end of this year to do that. Now, the second part is we want to make sure that the information flow between countries is strengthened. The reason for that is if we don't have enough information about trade, we will go buy things elsewhere in Europe, Southeast Asia. $6 billion US dollars is imported in the Caribbean alone in foodstuffs. And most of it comes from Europe or Southeast Asia. If we only can capture 3 billion of that in the coming 5 to 10 years, it will mean a lot of jobs, a lot of productivity, and so on. We don't have sophisticated, in Latin America and the Caribbean, we don't have sophisticated industries. Look at the pharmaceutical industry. Do we have one? 80% of pharmaceutics is provided by India and China to the whole world. So why not set up our own pharmaceutical? We have seen the dependency during COVID-19. So it's time we look at our hemisphere as a place where we can create prosperity, where we can create really an opportunity for young people to look towards the future and be secured of a job. Now, trade, so more trade between countries. I'm not speaking about the free trade area of the Americas, okay? I'm speaking simply about take away some barriers, harmonize your monetary systems, your banking sector, create more connections, and the rest will be done by business people, because where there is money to be made, they will make the money. But the connections must be made, the information should be there, data should be provided. Now, the second one is investments. A lot of investment in our hemisphere come from outside the hemisphere. We're not investing enough in our own hemisphere. So I'm suggesting keep the money in our own region. Suriname and Guyana are upcoming oil and gas producers. Guyana already, billions of dollars. Who is investing? Okay, the only company which from this hemisphere is there is ExxonMobil in Guyana. In Suriname, it's Total Energies from France and Petronas from Malaysia. Why not Argentinian, Colombian, Mexican investors in the region? It's about tens and tens of billions of dollars. We don't have a hemispheric-wide investment equity policy. So we rely on others outside the region to provide that. There's a lot of things we can do. So more connectivity, more data sharing, more trade, and more investments. And then the last one is we need to work, and I could go into specific sectors, but we need to work on technology. Artificial intelligence and cybersecurity will become the future. And if we don't start educating our youth, and that means basically reforming our educational systems, we will not be prepared for the new age. So these are the things which we're going to promote. And I mean, I'm not sophisticated in technology as you all are, but it is going to be a necessity. So our education system should start with that. And these are the things which the region has to decide on. I want to close by saying that later on, and you know, this is not something which will happen overnight, okay? I'm realistic enough. It will take time. But we need to strengthen our democracies. We need to strengthen our economies. No doubt. For that, you need leaders, strong leadership, firm leadership, and committed leadership. Now, I believe we have an opportunity later this year, and I would encourage the Hispanic Caucus to consider a delegation going to that meeting in the Dominican Republic, the Summit of the Americas, the 10th Summit of the Americas. 1994 was the first one with President Clinton in Miami. Since then, we had many, many more. The 10th one will be held historically in Punta Cana in Dominican Republic. Now, what does it mean? It is, I think the Congresswoman just spoke about turning points. This is a turning point. It can be positive. We go into a new direction, the hemisphere, or it can be business as usual, and we don't go anywhere. But that's the end of hemispheric cooperation. So Punta Cana is going to be historically important in terms of what kind of path we have towards the future. I'm going to speak much more in detail about the peace and prosperity agenda in Punta Cana as an example, but also a reality which we need to seek to achieve. For that, we will need all countries on board. No division, focus on what can be done rather than what cannot be done. And I am convinced, and our teams at the OAS work along those lines. I'm convinced that in every single areas, we can find synergies politically, economically, socially, to get to an hemisphere where we can be, where we have two things. One, a larger footprint in the global economy, and with that also more global influence, and also create an hemisphere where people of the Americas will be satisfied. Ultimately, in my view, it's about that. It's about the people and their prosperity. Thank you very much. Thank you very much.
Thank you,
Thank
thank
you.
you.
Sure.
If you don't mind, we're gonna ask if you could please take photos with all the youth. Now, it's not the whole side of this room. It's only a few. Want to make sure that we also accept his invitation.
Oh, you're the first youth. Okay.
Okay, that's good. I like that. I like that. I like this guy. I like him. And so we want to make sure that we have our global leader interns an opportunity to take a photo
Of
with
course,
you.
yes. yeah.
And I'm
At
sure
no
that,
cost.
and I'm sure they've already noted that we're inviting youth to go to
Yeah.
Western Hemisphere. So I'm sure they've already figured that out, that
Yeah.
we'll figure out a way to,
They can
to
come and
work together.
intern at the OAS.
oh, they can go to the OAS as
Yeah,
well.
for internships.
Okay.
Yeah.
Does the team at the OAS know
Most of
that? They
them
know
got a
that
job.
now.
Most of them get a job lately.
Oh, great.
Yeah.
Oh, see, this
So,
is even
yeah.
better. The students are gonna love it. So.
I'm equally transactional.
So no, thank you very much.
you.
And I'm gonna ask our interns if they could please,
That's right.
if we could do that here, do you mind?
Yeah, sure.
Is
Oh,
this okay? If you can just go ahead and stand in front. I don't know, is that enough room for the photographers to take a photo with the secretary? While we pause for the picture, do we have?
Maybe check something back to.
Okay. We can just get, got it? You get to be tall for today, yes. All right. All right. Thank you. Okay. All right. Thank you so much. What an honor. So wonderful. Thank you for all the great work you're gonna do at the. Another round of applause for our Secretary General of the OAS. Muchísimas gracias. Thank you. Oh, thank you. Now we're going to continue with the program. I'm going to ask if there's anyone else to please come on in. Please move a little bit closer. Now I have the pleasure of introducing our moderator for today's fireside chat with a special guest from Coinbase. Daniel Diaz-Balart is a lawyer and founding partner of government affairs firm called TSG Advocates, here based in Washington. He represents a broad portfolio of domestic and international clients, large and small businesses, foreign governments, and nonprofit organizations. Please join me in a round of applause for Daniel Diaz-Balart, who is also a CHLI board member.
Good afternoon, everyone. Thank you, Marianne. Since it is Hispanic Heritage Month, I get to introduce my tocayo, Dan Kim. Tocayo is a Spanish term for basically we have the same name, Dan. So we're learning here. Dan Kim serves as Vice President of Business Development at Coinbase, where he leads global strategic partnerships and directs international token listing initiatives that bridge cross-border markets in the evolving digital economy. He previously held senior leadership positions at Tesla as global head of sales and delivery, overseeing the global launch of the Model 3, and at Airbnb as head of supply for its premium hospitality division. An entrepreneur with deep experience in global commerce, he founded and expanded Red Mango to more than 300 locations worldwide before its acquisition. Dan earned his bachelor's degree in business administration from the University of California, Berkeley's Haas School of Business. Dan, please join me. Let's get started. Thank you. Thank you. Test.
Testing. All right, it's working.
Alrighty, great.
Thanks for having me.
Thank you, Dan. Thank you so much for being here. Thank you to Coinbase for being a sponsor. And I wanted to take the opportunity, especially to thank Coinbase for sponsoring the Lincoln Diaz-Balart Fellowship. That means a lot. So we really appreciate Coinbase supporting Chile. Today, we're going to talk about how digital dollars or stable coins are changing the way money moves around the world. We'll explore what they are, why they matter, and how they can make payments faster, cheaper, and more accessible for families and businesses alike. We'll also touch on what this means for trade and entrepreneurship, from helping small businesses manage cash flow to making it easier for people to send and receive money across borders. And finally, we'll look ahead at what needs to happen next so that more people can benefit from this technology, whether it's clearer rules, stronger protections, or broader adoption. And with that, let's get started. And so stablecoins aren't niche anymore, Dan. In the last year, adjusted on-chain stablecoin volumes were roughly $9 trillion, and close to 900 billion of that was to real payments, which include remittances, payroll, e-commerce, and B2B trade. In simple terms, what is a stablecoin, and why should Latino families especially, and small businesses care?
It's a horrible name, stable coin, right? If you don't know, or if you're not in crypto, like, what does that even mean? In fact, when I first got into crypto many years ago, the first token I bought was a stable coin. I had no idea what it was, but the word stable made me feel confident about buying this token. And every day I would check the price and it would just neither go up nor down. And I was like, wait, this is boring. What's going on? And then I finally looked into what I had bought, which is the definition of a stable coin. So a stable coin, and the reason why it's called stable is because crypto prices tend to be unstable, right? A stable coin is basically a digital dollar. So imagine me taking your physical dollar and exchanging it for a digital version of that dollar. And you own it, you custody it, you have control over it. And that's basically what it is. And we're seeing tremendous growth in stable coins all around the world, used for payments, used for trading, used for investing. And it's just an amazing way to move money faster, cheaper, and to increase accessibility to the US dollar. So that's why I think there's so much energy and excitement about this, because it's really a technology that, brings the financial system up to date and allows us to actually enjoy, take the benefits of tech and apply that to the dollar.
What makes these stable coins and the platforms that they're exchanged on cheaper? And why is it different than a regular institution? And why is it possible to make these transactions, quicker and cheaper? Because that's obviously so important to customers.
Yeah, I think it's because it uses technology natively, right? Today, to send money from the US to any other part of the world, it takes a long time, it takes weeks. And I think there's like 6 to 8% of fees they have to pay. It's just very, very inefficient. And that's just because there is very little tech that is involved in moving that money around. Because stablecoin is a product of blockchain technology, and because technology just tends to do things a lot more efficiently, faster, there's a lot of benefits for people who use stablecoins, companies and individuals. One of which is just sending money to another country, right? I mean, nowadays there's a lot of friction involved in that process. With stablecoins, you can just basically send it with one click and it arrives in seconds versus weeks, and pennies instead of 6 to 8% of that transaction. So that's one of the reasons why people are so excited about this as a technology.
Yeah, that's huge. Latino-owned businesses power U.S. growth, but face, as you were mentioning, higher costs and delays in payments, especially cross-border. Global remittance fees average about 6.5%. In 2023 alone, remittances to Latin America and the Caribbean from the United States totaled about $156 billion in remittances. So how do stablecoins change that for entrepreneurs here in the United States and abroad?
Well, first and foremost, I think moving money shouldn't take weeks. Moving money shouldn't cost 6 to 8%. Where does that go, right? It's to banks, middlemen, what have you. So the first benefit is just I can move money from point A to point B in a much more efficient way. I can move it in a way that doesn't cost a bunch of money. So there's more money available to you. And for businesses, that's super important when you're competing for margins and you're, working capital and availability of just having that cash is super important, right? You think about weekends, like I can't send money through traditional banking systems on weekends, right? Which is really silly. With stable coins, you can send it any day of the week, any time of the day, right? So that's really the big benefit here. In addition to that, just the whole idea of like $160 billion of money being sent home outside of the US, why not do that in a much more efficient way where more of that money we send arrives at the destination without all those middlemen taking their fees, right? So that's one of the reasons why I think stablecoins are so exciting. Now for entrepreneurs, and especially Hispanic entrepreneurs or any minority entrepreneurs, there's a lot of friction in being able to access financial and banking systems. I grew up in an immigrant family and we had cash, right? And no one really trusted banks, right? And we gave cash, we hid it in places. And when you start a business, you hear about loans and all that kind of, like my parents didn't have access, they have no credit, right? I think stable coins and blockchain technology changes a lot of that, right? It's not about who you are, how long you've been here. It's what you're doing, what you can do, and how well you understand the technology that you have available to you. So I think it democratizes access to very sophisticated banking systems. I am now, and I've never done this in my life, I'm now lending money to others, right? Which you couldn't do before unless you were a big bank. And that always irritated me. Like, why can't I loan people money, even if it's like $100? Now you can with stable coins because there's the technology allows you to lend, borrow, no matter who you are, no matter where you're located. And it's that accessibility and that democratization that I think is super exciting.
And obviously, Coinbase is a familiar platform, but with more folks getting more familiar with the concept of stable coins and its availability and becoming comfortable with it, is the trend, is it obviously going up in terms of folks, for instance, utilizing stable coins to send remittances to Latin America? Is the trend, is it going up? Is that what you're seeing?
It's definitely going up. And I think the biggest blocker has been, hey, is this legal? Is this the right way to do it? Like, what are the rules? And I think the absence of that makes a lot of people, a lot of businesses, a lot of families nervous, right? So when you have a lot of regulatory frameworks that start to come and get passed, like the Genius Act, I think that gives businesses a lot of confidence to actually start using the technology instead of it being something that is just kind of there without someone telling them how to use it.
And that's a good way to segue into the Genius Act, which President Trump signed in July of this year. And that legislation formally recognizes dollar stablecoins. What does the Genius Act unlock, and what else needs to be done? We know that the Clarity Act is being considered. So what else is needed so that small businesses can adopt these tools safely and also at scale?
And I forget what each of the letters stands for. I know it stands for something in the S of stablecoins, and kudos to whoever comes up with these really clever names. But the Genius Act legitimizes and recognizes the digital dollar, right, as a stablecoin. So I think that's a huge step in helping companies and families and individuals feel comfortable about using them, but more importantly, educating them on what it is. If you never heard of crypto and you hear stablecoin, you're going to be like, what the heck is that, right? But that's just the beginning. I think the next step is to really address who manages what, who oversees what within a context beyond stablecoins. Because if you look at stablecoins, it is crypto, it is blockchain, right? And while Genius focuses on the stablecoin aspect of it, I think there's more regulation that still needs to be passed to recognize how crypto and blockchain are going to be governed and overseen. And I think that's what we're going to hoping for in things like the Clarity Act. Right?
And we know that Coinbase is going to be involved. Dan, it's been a pleasure to have you with us. Thank you for joining us at the Trade Symposium. Thank you once again to Coinbase for being a sponsor and for your support. And it's been a pleasure, my friend.
Thank you for having me. Appreciate it.
Yeah.
Think to just stand and pose for a photo for the photographer.
Just a little bit stiff to the front.
This way?
Yep.
Wait a minute.
Very good. Get that, looks good. Check that, perfect, last one. Thank you.
Thank you all.
All right, another round of applause. Hopefully everybody learned as well some more information. Thank you again, Dan and Daniel, the Tocayos here. Very much appreciate that. Now I would like to welcome our next guest speaker, Antonia Garastos. Did we write that? Garastasu. So I mentioned this before, and some of you will remember, Congressman Lincoln Diaz-Balart, former chairman, founder. So we would have this joke every time that we would plan for the gala. We would go through all the names of the ambassadors, and we'd go through all the names of the countries, and he would pronounce it, then I would pronounce it, and then we'd go back and forth, and we weren't sure, we dial for like a lifeline, and we'd call somebody, we text somebody for the name, and then at the end we would go, he would say, Marianne, you just pronounce it really firm and in Spanish. And if it's not in Spanish, today they're in Spanish. So want to make sure, and we joked around about that earlier, so I just want to share that because even though Lincoln is not here with us right now, he's always with us. To Antonia Garastasu is the Senior Director for Latin America and the Caribbean at the International Republican Institute, IRI, providing strategic leadership and management to the division. Previously, he directed the Center for Global Impact at IRI, focusing on democratic development programs and global initiatives. Tony has also held roles as country director, overseeing programs in Central America, Haiti, Mexico, and emphasizing anti-corruption, security, and governance. Before his tenure at IRI, he managed public-private partnerships at Global Via Infrastructures and directed his Spain, United States Chamber of Commerce. Tony has also served in governmental roles, including Deputy Director for International Affairs at the Florida Office of Tourism, Trade and Economic Development. He holds a bachelor's degree in History and Political Science from the University of Florida and a master's and PhD in International Studies from the University of Miami. He has published extensively on trade politics, including his dissertation on U.S. free trade agreements with Jordan, Singapore, and Chile. So please join me in welcoming Antonia Garastasu. All right.
No, I think that's actually much better than my history professor at Columbus High School. He called me Gastro. That was like, really, it's not, I don't know how you get that. But thank you. It's great to be at the Congressional Hispanic Leadership Institute. Thank you for the invitation. It's a great honor. It's an outstanding organization. I do know a little bit about it firsthand. So actually, some of my former colleagues at IRI also have served as part of the Global Leaders Program. So I know a little bit about it. I'd also like to take a moment to recognize the Secretary General who left, but I really liked his remarks on the prosperity and peace agenda. I like the fact that he brought up the Summit of the Americas and in Punta Cana. I think that will certainly serve as an important platform to discuss trade, democracy, security in the hemisphere, as it's going to be a forum really to elevate some of these issues. Interestingly, IRI will actually be hosting an event in this same spirit, focused on free markets, prosperity, democracy, and regional integration, because we believe these values are extremely essential and important for the future of our hemisphere. So I've been asked to talk a little bit, just a few minutes, on some of the challenges and opportunities specifically related to trade in our region. So let me start with the challenges. I'd like to end a little bit more positively. So thinking about the challenges in our region, first, institutional fragility can certainly impact investor confidence. In some countries, despite some of their natural wealth cycles of vitality, and weak institutions often deter, long-term investment. Some countries have faced recurring economic crises, political instability, struggle with institutional capacities such as judiciary or regulatory agencies, suffering from limited capacity or lack of independence and low transparency. And this, of course, undermines investments, investor trust, leads to unpredictability and really uneven rules of the game. There really needs to be some predictability and a rules-based environment that can provide investors with the confidence that they need. Second, in several countries, there's an overdependence on single markets or commodities. Think Ecuador, for example, relies very heavily, right, on oil exports, which accounts for a significant portion of its fiscal revenue and trade balance. But when oil prices drop significantly or globally, they suffer disproportionately, affecting public spending and economic stability. This dependence really makes Ecuador highly sensitive to global price fluctuations and, of course, geopolitical shifts. At the same time, Ecuador is navigating quite complex relationships with China, the US, and regional partners, right? So it's important, we think, to strike a balance, preserving that strategic autonomy while creating transparent, rules-based frameworks that can really attract investment, diversified investment, and reduce vulnerability. Third, there could be sometimes a lack of infrastructure and regulatory bottlenecks. Take Paraguay and Bolivia, for example, both landlocked countries. So they need better connectivity to ports, such as, for example, Panama. Being landlocked also increases trade costs and delays, making it harder for, again, Bolivia or Paraguay to compete globally unless they improve infrastructure and regional connectivity. The Secretary General was really talking about kind of the connectivity in the region, which is very, very important. Also, at the same time, we have some outdated systems and fragmented regulations, which could slow down trade and increase costs, important for businesses. To stay competitive, they should double down on legal clarity, sectoral strength, and regulatory consistency. The region, however, is really, really, again, as the Secretary General alluded to, is very highly adaptive and very innovative. So opportunities for strategic growth abound. One big, huge opportunity is revisiting nearshoring with rules-based integration. Vast examples, right, of how integration provides benefits for both the US and key allies in the region. The Dominican Republic, for example, has a stellar trading relationship here in the US or with the US. It's a logistics and manufacturing hub, serving both North America and South America, anchored in trust, very, very important. It's not only their geographical proximity, but the DRI is also, let's face it, aligned in democratic values and economic interests. That's very important. We want to know who we're doing business with. So that's important. Second is investing in strategic infrastructure and the trade corridors. Think Panama. It's more than a canal, right? It's a gateway. Its opportunity lies in becoming a value-added hub, not just transit, but manufacturing, repair, re-export. Its geographic location and existing logistics infrastructure make it ideal for becoming a regional center for trade and industrial services. So imagine a corridor linking Paraguay to Panama, unlocking new trade flows and regional integration. It would also help counter PRC influence and investment in our hemisphere. In this line, we should try to leverage, right, the U.S. International Development Corporation, DFC, to provide alternative financing to Chinese investment in projects that strengthen really democratic resilience through economic modernization, digitalization, high quality infrastructure, particularly in areas vulnerable to authoritarian influence. Third, and something I think we need to invest now as a community, as a region, is diversification into services and digital trade. Costa Rica and Panama are also very well positioned to lead in fintech, data services, and cross-border platforms. Costa Rica, for instance, has a tremendous strong education system, very tech-savvy workforce, and it's attracted global companies in digital services and cybersecurity, for example. So the future of trade is increasingly digitalization, as Secretary Ramdeen noted, and these countries can really help lead the way. And finally, as I mentioned earlier, we must take advantage of existing regional platforms for dialogue and action, such as the Organization of American States and the Summit of the Americas, which really offer a unique space to align public and private sectors from all countries in the Western Hemisphere around shared regional goals. Events like the one that IRI and the Heritage Foundation are organizing focus on free markets, prosperity, and integration, I think are essential to turning ideas into action. You know, trade is not just about goods, it's about relationships, shared values, and evolving together. Agreements are not endpoints, they are living frameworks, and they must adapt and evolve. So let's invest in capacity, let's align rules, let's offer long-term commitments, let's invest in infrastructure and strengthen institutions. Rule of law at the end of the day is extremely important for trade and for the business climate. So let's help build value chains that reduce vulnerability to global shocks, and let's build trust so together we can build a safer, stronger, and more prosperous hemisphere. Thank you. Thank you. Oh, picture. Oh, yes.
Before we do your formal thank you, the chairwoman, if you can please join us for a photograph. And we can do one right up here or just on the side there. So another round of applause here. Yeah, right on top there. No, just the two of you. Go ahead. Go ahead. Go ahead.
Danny, come join me then. Do we have some board members here?
Do we, I just gonna announce Leo Munoz from Comcast is here to join for the photo. She wants you up here. And is Isaac still here? Reyes from Target, he was just here. He probably went out to get his colleague from Target, so we can have our board member here.
Leo is our eye candy.
Okay, I want to stand next to him.
Okay.
I'm gonna leave these.
Okay.
Okay.
So while they're taking that photograph, I'm going to ask a couple of other people here to announce and to recognize. And see, where did he go? Did I just lose Roger? Where's Roger?
I think Roger might have just left.
Oh, he just left? Oh, okay. So just want to announce a couple of other people that you just met here. So Leo Munoz from Comcast, one of our board members.
Yes, of Akin.
Of Akin, okay, thank you, all right.
Anna, stand up and take a bow.
Anna, thank you, thank you. Also want to recognize who just left, so I'm sorry that I missed him as he was leaving, but he was here and I just want to formally recognize him as well. Roger Noriega is a former U.S. ambassador to the OAS, and he was also the Assistant Secretary for Western Hemisphere under President George W. Bush. So thank you again for him joining us. And also we are joined by Ambassador Ana Irene Delgado, the Panama's ambassador to the OAS. Mucho gusto, gracias por acompañarnos. We are going to take a 5-minute break while we change this from a fireside chat to a panel discussion. So go ahead and make new friends, 5-minute break, and we'll be right back. Thank you very much.
Oh, okay.
I can't sit on the end. I can't dodge. I can't hide.
No shit. All right, thank you. Thank you.
Okay, we're getting back to the program.
I know.
Get that last business card, take the photo, get the selfie, una agüita, un café. I'm going to also ask people to move in a little closer. If you can move in a little closer, the people on this side move in here. I know I see interns, alumni, some other guests. Please don't be shy, move on in. So now I have the pleasure of introducing our moderator for today's discussion on agriculture. Unlike the fireside chats, we will take questions from the audience. So be prepared to have some questions for all the special guests here and including the moderator. So I'm going to introduce you our moderator, and then he can take it from there. John Weber knows what it takes to break through the noise on Capitol Hill. So help me, John, here, calm everybody down. So, okay, all right. He is also a master in communications, specifically with very nuanced policy matters. Prior to monument advocacy, where he works now, John served as a legislative director for U.S. Representative Dusty Johnson and as committee staff for the House Agriculture Committee under the leadership of Chairman Conaway. He staffed committees and caucuses focusing on the benefits of trade and the impacts to Middle America, particularly agriculture interests. I also wanted to share, just for my reference and for point of privilege here, very much thankful to John and the team at Monument, who have also really helped us with this event. And also just a little tad on agriculture is that agriculture is very important to me. I grew up in a farm worker camp in Central California. So agriculture was everywhere. We were part of agriculture. And so even though agriculture is a big trade discussion, sometimes it didn't feel like a big trade conversation when your parents are working in the field. Although I could tell you that we lived in the Delta and literally a Delta surrounded by water, Delta Islands. You can look it up. It's just east of San Francisco. But what was really interesting was that when my dad worked the field, he'd come home when it got dark, but my mom was still working in the packing sheds. And so during the potato season, we could see the Safeway trucks along the levee. And so we knew what time mom was going to come home because every truck of a Safeway meant an extra hour. And couldn't finish what got picked that day, had to be sorted and packaged and sent off on the Safeway trucks. So I have a very personal understanding of what it is like. And to this day, I don't know why, but I still like potatoes anyway that I can have them. So, but John, the floor is yours, dear.
Well, thank you, Mary Ann, and thank you for those attending this program. I think in many ways, a lot of these issues are personal to us, but just really largely so important in a time like this. So it's really a pleasure to bring together such a distinguished panel and an audience to discuss them, and agriculture, trade, and a partnership for a competitive hemisphere. So important. Our discussion is going to explore how strengthening regional ties in agriculture can open up opportunities for farmers, but also enhance value for consumers and build more resilient supply chains, a term that we have obviously explored so much over the last 5 years. And ultimately boost economic growth, increasing the region's global competitiveness, which is at the core of all this. So please welcome me and welcoming our panelists for a quick round of applause. It's not an easy time to ever answer any questions in Washington with any degree of certainty, so we're really excited to have them here today. All right, so we'll start with Karis Gutter. Karis is the Vice President of Government and Industry Affairs for North America at Corteva Agriscience. Before joining Corteva, he played key roles at USDA, including Deputy Undersecretary for Farm and Foreign Agriculture Service and Military Veterans Agriculture Liaison. A native of Terry, Mississippi, Gutter began his public service in the U.S. Marine Corps Reserves and later worked in local government. He also served on Capitol Hill as Deputy Chief of Staff and Legislative Director to Congressman Benny Thompson, and as a staff member of the House Committee on Homeland Security. Next, we've got Tracy Chow. Tracy has been with Western Growers since 2018. In her role, she advocates for new and enhanced foreign market access for U.S. grown fruits, vegetables, and tree nuts. This involves tackling tariff rates, pest and disease barriers, and food safety standards. She also assists Western Growers members with individual issues impacting their business. Before her current role at Western Growers, she was legislative assistant to former Rep. Jeff Denham of California, covering his House Agriculture Committee assignment and agriculture trade issues. And as a Central California native, she is a proud alum of Cal State University Fresno, earning her BA in political science with a focus on international policy. And last but not least, we've got Michael Shump. Michael serves as the Senior Director of International Affairs for the Meat Institute, where he advises and consults the association's members, U.S. government relations stakeholders, and international partners on pertinent issues affecting the U.S. meat and poultry trade, providing both technical expertise and strategic guidance to facilitate trade in the U.S. meat and poultry products. He has led and participated in numerous trade missions to Asia, Africa, and South America, where he has worked to reduce trade barriers and improve market access for U.S. meat, poultry, and animal byproduct exports. In addition to overseeing international affairs and trade policy issues for the Meat Institute, he manages the association's supply chain and transportation issues portfolio with a particular emphasis on ocean shipping and Federal Maritime Commission rulemakings. Shump earned his Master's of Arts in Political Management from George Washington University in Washington, D.C. in 2014 with a focus on advocacy and strategic communications. He also received his Bachelor of Arts, summa cum laude, Phi Beta Kappa in Political Science from George Washington University in 2012. He's a member of the USDA's Ag Technical Advisory Committee for Animals and Animal Products, where he advises the Secretary of Ag and the U.S. Trade Representative's Office on policy impacting U.S. poultry and trade. So with that, we'll get to all the easy questions. Now let's get started with the discussion. I'm going to ask each panelist a specific question based on their expertise, as we've got a huge wide array here. And other panelists are obviously welcome to jump in as we've got diversity of opinions, and this is certainly a complex subject. So let's start with you, Karis. Can you walk us through the significant milestones in trade and tariff agenda over the past year?
Wow. First of all, good afternoon.
Yeah.
Really excited to be with you all. Again, I'm Karis and I work with Corteva Agriscience. And I think it's important to give a bit of context about Corteva as we tell the story of how we fit within this trade agenda. Corteva is an ag seed and crop protection company. We have a footprint globally in about 120 countries around the globe, about 20,000 employees, and we're providing seed inputs to about 10 million farmers all around the world. Now, we began the year January 20th with the inauguration. Immediately, we saw executive orders that set the tone for what the administration has coined as the America First trade policy agenda. Within a week's time, they rolled out with the first tariffs. Tariff is a word that we're becoming more familiar with, right? Those first tariffs were meant to use IEEPA, which is a war powers tariff authority, for the first time used, where the intent was to put pressure on China, Canada, and Mexico to drive security and economic security on both drug trafficking, fentanyl, and trade imbalances. From that first week, they came back and they announced, we're going to come back and do fair and reciprocal trade. That was around February the 13th. And on the 13th, they said, let's look. We're going to study the trade imbalances and surpluses over the next month. And then in early April, we're going to coin what we call Liberation Day. We heard that term. So as I walk us through the year, we started with the huge announcement on this fair and reciprocal trade. We're going to use and test drive these authorities. And now we're going to liberate the US economy through this Liberation Day. Since that date, we've been walking slowly towards a series of agreements. There are 195 countries in the world. We're actively as a country negotiating with 70 of those different countries. And for the other 120 plus, there's a blanket 10% where the US has a trade surplus. So that's how we get to what that strategy is built about. And on those 70, the administration is seeking through the use of tariffs, joint statements or joint agreements with all of those countries. So that's how we've gotten from point A to B. We've been marching towards this slow, tariffs are on again, off again. Tariffs are at 145% rates on China. They're down to 45% rates, up and down from one country to the next over the first 7 months of this year. And here we are. We're now moving towards Q4, where there's a lot of pressure to seal the deal on those remaining agreements. About 15 to 20 countries have already come back with their joint statements and said, here's what we offer as a stable next few steps in our relationship with the US. And there's another 40 or so countries still yet to be negotiated. Some of those key markets for us, Corteva, our footprint, predominantly half of our business is in the United States. Another 25% or so is sales in and across LATAM. And we have major markets where we have to gain approvals in those other geographies, right? Because in the corn, seed, and soybean sectors, we have to gain approval everywhere all across the globe to ship product anywhere in the globe. And so part of our challenge is we need stable trade partners and trade relationships. These negotiations offer both opportunities and challenges, but that's how we've started the year, with a flurry of activity, a flurry of instability in a lot of ways, and a series of question marks.
Well, I appreciated how you said the year went from January to April, because it certainly felt that way at the pace of everything going on. Well, let's pivot to Tracy. There's been much said about how the global trade norms have just been upended, and we're trying everything new in a new recent years. How is your organization contemplating this new era of trade? Is there a need to defend, adapt, or a little bit of both?
Thank you for the question. And again, it's good to see everybody. Again, quick background from Western Growers, because our name is maybe not as familiar as I would like to think it is. But so we're a fresh produce association representing fresh growers, packers, and shippers of vegetables, fruit, and tree nuts, predominantly out west, as our name says. So California, Arizona, New Mexico, and Colorado is our official region. But certainly we have members that grow in Oregon and Georgia and Florida. And certainly for some of our bigger members, they have operations south of the border into Europe, Peru, those areas. But I will preface by saying our expertise is more in the export focused space. And so happy to comment where I can, if I need to, on the import side. And you're right. I think that the answer is it's obviously both. And for farmers, they're used to having to do both. Our members are very defensive and have confidence in what they have done to date, what they do to produce a safe product, but they also recognize the realities, both when it comes to changes in government regulation, but also changes in consumer preferences. You always have to be adaptable, otherwise you get left behind. And in this trade space, it's no different. I think that if anyone like me and others have been sort of reading a lot of what the experts have been saying, even leading up to, last year campaign, a lot of that rhetoric, you see a lot of big players in the space. They're saying like the old ways are over. This, where we were as in an international trade space post World War II, like that will change now. And some big names are saying that. So I think we don't take that lightly, that's happened. But that doesn't mean we're completely just throwing up our hands and saying, well, let's just try to figure out this new space. Because I think that there's a lot that needs to be touted and defended, and whether it's us all having to, we assume that this would be the norm, and we just have to figure out ways to re-message this, both here in DC, Capitol Hill, but also with, again, average Americans, consumers that have a lot of strong feelings about what trade has done for them and their bottom line. So from the farmer perspective, I'll say where we feel there needs to be defense is certainly in the tariff space. I think that the norms really should be, where we can, zero to low tariffs with exceptions in place. Tariffs should be the exception, not the rule. And I think what we've seen over the last 9 to 10 months is that tariffs are becoming the rule. And there seems to be a concerning, I'll say, acceptance that there will be some level of tariffs just in perpetuity. And I think that should be more concerning, especially when we think about, again, for the produce space. And I'll sort of hyper focus, I'll say, within the North American space, the US, Mexico, Canada agreement, because that's where a lot of my time has been focused the last couple of weeks. When you think back to NAFTA, 1994, roughly, over the last 30 years, just looking at US produce exports into just those two markets, which have now skyrocketed, they are by far our number one, number two market for US growers of produce to send out. 1.4 billion, 1995, up to 6.2 billion just last year. That's an over 300% growth. And a lot of that is tied to the reduction of tariff rates that were secured under NAFTA and maintained under USMCA. We've been cautiously optimistic that so far for us, the USMCA treatment has stayed in place, even with all of these reciprocal retaliatory tariffs. For the most part, that has stayed relatively level. So that the notion of free tariffs and what that does for international trade and movement should be something that should be touted more and shouldn't just be rolled over. I'd say in the other area too, defending it, which is, we need to have certainly agreements, refreshed agreements, to think about creative ways, but the agreements have to be worth more than the paper they're written on. And so if we can get back to talking about how do we establish rules, get detailed about reciprocal dispute resolutions processes to have that sort of reliability and certainty, because as we've seen, it just can't continue to be this. Well, we'll just see how we feel tomorrow. No one can plan for that. So I think that we're, at least for my organization and our view, we have to get back to some place of where can we, if the processes have to change, can we at least look at that and see, can we have people agree to that moving forward? So it's not just on a whim based off of, as we've also seen, issues that are completely unrelated to trade, now getting involved in trade and markets and tariffs, where you have national security, political, judicial, international, intellectual property, all kind of meshing their way into trade. Where we have to adapt though, and this goes into, again, what our farmers always have to do, which is how do we adapt to consumer demands? And this will, I'll say, predates the current administration. We have seen, and you are all, I assume, hopefully consumers of fresh fruits and vegetables. We've seen a huge increase in interest from consumers. Where is their food coming from? They want information. They want transparency. They want to feel good about where their food is coming from and where their dollar is going. So it goes beyond just, does it taste good? Does it look good? And does it cost affordably? They want to know about sustainability. They want to know about worker standards. We now are seeing more about like packaging, for example, not to get too micro. So we're seeing this landscape of consumers, both here at home as well as in our foreign markets, that want to see this. And that has to come with more awareness of other markets, rules, regulations, things like that, and understanding that when it comes to us and how do we maintain access, and also again talking with the trading partners that certainly want to sell here too, there will need to be awareness of these new consumer demands, and how do we ensure that we're not trying to all work on 50 different standards, because that's a huge challenge for us. So that's where we need the adaptation, is just responding to the consumer base, who in turn, they're also voters and they're influencing their own governments. You've seen this, for example, in Canada. We have to be mindful of that. And in some of those areas, we can't just come in and say, no, just stick with the old ways. That's where we want to be. We have to be able to change.
Michael, let's pivot to you. How have Meat Institute members been impacted by the current trade landscape?
Sure. Thanks for the question, and thanks for the invitation today. It's been a mix. So I think that, to Tracy's point on the US-Mexico-Canada agreement, if we start there, those are two critical markets for the Meat Institute, so Canada and Mexico in particular. And Mexico is our top market for pork, top market for poultry, fourth market or so for beef, and Canada is a top 5 market for all of those as well. The benefit to our members has been that the administration has exempted tariffs on Canada and Mexico product that complies with USMCA. And in turn, the products that we send to both of those markets are also exempt. And so the vast majority of our members that export, and we represent, I should say, the packer and processor members. So we are not representatives of the producers, the farmers, the ranchers, but we obviously work closely with them and rely on them for our trade. But we produce the products that you see on shelves that you hopefully consume in restaurants, et cetera. And so we are the exporters as well. So having exemptions on product that complies with our US-Mexico-Canada trade agreement has been critically important for our industry because, again, this helps those smaller and medium-sized members in the US stay afloat because they rely on sending products to Canada and Mexico for income. The other benefit to what we've been seeing, if you look for silver linings here, is that the administration has been focused on trying to establish footholds in Southeast Asia, and that's a critical growth market for our products. And so you've seen announcements related to Indonesia, the Philippines, Vietnam, about potential trade deals. We're still waiting to see all the details, and we look forward to seeing those details. But what we have seen is that there are several areas for the meat and poultry side of the equation that would be helped by the conclusion and implementation of those agreements. So with Indonesia, for example, we face establishment registration concerns all across the globe. That's where we have countries putting in place regulations and requirements for our meat and poultry establishments that want to export. They put up requirements that make it harder sometimes for us to export. And so Indonesia and the deal that was announced between the administration and Indonesia would potentially resolve that concern. And so we would look to see that in a lot of other markets. So we see, again, opportunities here in these places to resolve some of our longstanding barriers to trade. The United Kingdom, there was an announcement about increased market access for beef. With the European Union, increased market access for pork, for bison, and some of those other products. But we also have longstanding barriers related to how we produce food in the US that other countries, particularly Europe, don't necessarily agree with. And so Europe does not, in our view, apply science-based, risk-based standards, which is key in international trade. And so we would love to see the administration not only find ways to reduce tariffs in some of these markets, but also increase our access through reducing non-tariff barriers, like we call them. And so if the tariffs are used strategically, to Tracy's point, we would probably prefer zero tariffs or no tariffs for our trade. But if they're used strategically to bring some of these countries to the table and provide tangible benefits for our members, then I think there are opportunities there. But we also want to make sure that there are durable, enforceable agreements that have binding commitments. And so we have to see if these trade deals actually result in that, because if not, it's very hard to hold trading partners accountable. And therefore, our market access might actually not be what is promised in these agreements.
Well, it's the European segue, I think, is a good segue to the next question here for Tracy, because I think in trade negotiations, one of the most persistent and difficult areas is, it's politically charged in the area of agriculture, oftentimes in home countries, including our own. So, Tracy, for you, what are some of the biggest challenges to a stronger supply chain and cooperation with that hanging over us?
Yeah, I mean, I think I would argue someone here, like agriculture and food often feels like the third rail of international trade negotiations. The amount of times where we've seen big meetings and summits together and they're talking raw trade, and then we hear, oh, but they're not going to discuss ag at this one. It's like, well, then why am I listening to this? And I think, as we know, it's cultural, right? We're talking about people's food. We're talking about certain crops that certain countries have been growing for thousands of years. And so it gets very sensitive, and it gets, we'll say, not economical and logical in sense. And I think that that's always a sensitivity that has to be considered. And certainly, I think speaking from the produce space in particular, the US has been a net importer of fruits and vegetables for decades now. And you can go to a lot of different places in this country with some long-standing, real deep frustrations with what they view as fair or unfair import competition, especially coming from the Western Hemisphere, which I would say makes up well over 80% of the imports that we have of fresh produce. And so that's certainly, I'll say, a mixed, if you were to go to the community I come from and ask about, like, where do we feel on USMCA, free trade, yes or no, you're going to get a mixed bag. So I think that the biggest challenges around that, is, and this I would say applies to not just ag, but it's certainly very noticeable in ag, is, I'll say, one country's patriotism is another country's protectionism. Where is that line of just saying, hey, we're not trying to keep out your stuff, we just want to support our farmers? Where's that line? Everyone does it. The US does it, other countries do it. And I think that when we think about the challenges, is that especially in our space, the horticulture space, it's like 300 different crops, different regions, different growing needs. And so I think the challenge is how do you level that playing field? Some areas just by their nature are going to be cheaper to grow, whether by policy or by economics. So that's always a challenge, is how do we ensure that there is a level playing field when it comes to import v export in any country? And how do you ensure, that there's parity, I'll say, for example, for us in areas like food safety. That's also very challenging because you're dealing with, at that point, national standards of regulation. Also in the space of, for us, the challenges too is when we think about the seasonality of our products. If we're talking complementary seasons, like, I get it. And I think we all are benefiting now from this, where we have year-round produce available to us. You shouldn't be able to get a strawberry in January, but you do because of how the systems have worked. So complementary is one thing, but when you see more and more of that direct competition of cost differentials, that's where a lot of the frustrations, it's hard to get people to really collaborate and say, we want a unified produce supply chain. We want a unified produce competitors in the hemisphere, because people are in their camps, and they obviously at the end of the day want to be able to maintain their country's ability to produce that food. So I think that's just the challenges when you talk about cultural areas, seasons, and then just the cost differential, because we're price takers, not price makers. So this isn't about the US guys can just make their costs a certain way. It's difficult for them to try to maintain competitiveness just on their own.
USMCA, we feel like we just got that wrapped up just yesterday. It feels like, but we're right around the corner from review. Michael, what's the Meat Institute looking at in regards to positions on the upcoming review of the agreement?
Sure. Next July is when the review process is supposed to start, July 2026. And the U.S. Trade Representative's Office has put out a request for comments that are due November 3rd, I believe, with some additional public stakeholder hearings later that month. So we are definitely focused on USMCA. As I said in my previous answer, Mexico and Canada are two of our critical markets. And so by and large, we support the continuation of USMCA as it is. I mean, certain sectors and industries might have different takes on what could be improved. I think, don't want to speak for those, but I think you've seen public reports about concerns with dairy and lumber and these other areas. We try to stay out of that as the meat and poultry industry, because for us, it has really worked quite well. That doesn't mean you can't improve things on the margins, but we view the USMCA as having the tools, the consultative mechanisms, the dispute resolution mechanisms, all of these different areas that exist within the agreement that can be used to resolve disputes and improve the agreement, and that we don't have to rip it up, tear it up, and start anew, because that would be quite devastating for, I think, a lot of our member companies and the folks we represent. Like I said earlier, with the numbers, I mean, Mexico is our top market for pork, top market for poultry, and a top 4 market for beef. But Mexico also takes products like beef variety meats, pork variety meats, these products that consumers here in the US don't really eat a lot of, stomach, intestines, that kind of, all that fun stuff. And to us, we view it too, if you're broadening it out, as the administration seems to be looking at economic and national security reasons, we view USMCA continuation as pivotal for our economic security and our national security, because when you're talking about nearshoring supply chains and strengthening regional supply chains, that's USMCA. It's a very integrated market. Our product travels across the border a couple times before it reaches the end consumer. And so companies have built their supply chains around that type of trade, which in turn employs American workers here and, supports rural and urban communities. And so if you tear it up, it would have grave implications for our economic security as well. So that's how we're viewing it. We view the agreement as strong, as helping to employ Americans, revitalize communities, and ensure trade. And so that's what our comments will also reflect when we submit them later this month.
That's great. Carlos, let's pivot to you and take a step back on trade. How are companies adapting to the evolving challenges of this trade environment from investor and shareholder perspective?
Yeah, I'll begin by saying in business, we thrive off of stability, certainty. And these changes and challenges have been nothing but unstable. And so from a corporate standpoint, these economic indicators force us to look at our resilience in supply chain. How do we diversify our operations so that we're not reliant on any one set of indicators, one set of geographies? I'll give you an example. When I mentioned earlier, about half of our business is in the United States. We're sourcing products predominantly from our neighbors, our partners, right? It's easy to source products in from Canada and in through Mexico. And so in the early days, there were no guidances and rules around USMCA compliant, products being exempt. And so that uncertainty created a need for the business to quickly identify what other source partners are the low cost providers, because we have to ensure that our product price points remain stable for farmers, right? And so we're sourcing from other regions. We're looking at those regions subsequently be hit with tariffs and then having to redirect. And so again, what we're starting to look at is the diversity of our supply chain. We're also looking at production locally. To the extent we can, you want to have as much production in a country to limit or mitigate against all of the instability in sourcing products. And so we're looking at those kinds of techniques. We're also now adding geopolitical risk as a factor, whereas before it was a minor risk. With all of the instability globally, ranging from conflict and chaos in certain regions of the world, where input costs for us are going up, the ability to source inputs, the ability to obtain fertilizer or gas, those things have an impact on business. And so those geopolitical dynamics have become a bigger factor of our corporate review points than they ever have before. Then there's investors. Investors thrive off of stability, right? And so for us, we invest $4 million a day. We spend $4 million a day in R&D. And in order to spend that kind of money, you have to be able to get a product to market. And so that risk is something that we're evaluating very, very closely. And the last thing that I'll mention is education around policymakers. These are new tools that have been used in unprecedented ways. And we've got 435 members of the House and about 100 members of the Senate that we're helping to bring up to speed and share our story with in ways that we never have had to do before. We're educating ourselves, but we're also sharing our story with others. And then we're going into the administration, making sure that they understand. And that's just the US, because we then have to go globally. Corteva's in 120 countries. We're beginning to see some of those activities and actions extend to other geographies around the globe, right? When China starts to put limits on Canada's canola, well, we're one of the top providers of canola in Canada. And those kinds of actions probably were copycatted or sparked based on the trade challenges that we see here. So we're beginning to see much more activity in those geographies. And then we're also beginning to see stronger alignments being made against those that were close partners to the United States. So when Canada, Mexico, or Brazil begin to realign their business operations with one another or with possibly China or Russia, that's something that we're paying attention to.
Well, speaking of diversifying markets, we've seen the Secretary of Agriculture be pretty active in trade missions and other things like that. Michael, are there markets that would be particularly beneficial for U.S. meat and poultry export that we should be prioritizing as part of these negotiations and efforts?
Yeah, thanks for the question. I think the focus for our industry in particular is on Southeast Asia, as I mentioned a few examples earlier. The Western Hemisphere is really critical, obviously maintaining USMCA, but looking at South America and our trade there too, it's not as strong as it could be. But where our members see the greatest potential value is in the ASEAN region, where we face competition from China, from the European Union, from Canada, from Australia, New Zealand. All of these are large beef and meat exporters to those regions, and they are actively negotiating agreements that the more we shy away from it, we will be out of these markets. 95% of consumers live outside the US, and so you can only grow so much here. And what we see in Asia is they take all parts of the animal, which also again returns value to communities here and props up jobs, especially for small and medium-sized businesses. So what we're focused on, again, as I said earlier, are agreements that you can enforce, that are binding, that are able to actually have some teeth to them, so that when we do try to gain a foothold in these markets, we actually can compete on a level playing field with these other countries and suppliers. And so just to give examples, we can't just address, there's tariffs and non-tariff barriers in trade. And so tariffs are one area, and there are high tariffs that we face in the ASEAN region. I could give an example of 30% on our beef going into Vietnam, a higher tariff on our pork going into Vietnam than even Russia faces, for instance, or the European Union or Canada. So we are priced out of some of these markets because of that. But we also have to address these other barriers I mentioned earlier, barriers around our facilities needing to be registered in order to export, or our products needing to be registered to be able to export. Import licenses that countries give out that are not necessarily given out to a lot of importers in countries. And so we don't have as much opportunity to gain access here. All of this has to be addressed concurrently, because if you address a tariff but don't address one of those other non-tariff barriers, we will still be facing an uneven playing field compared to our competitors. And so we are advocating for all of that to be addressed at the same time. And Southeast Asia is critical because of the rising population, increasing incomes, where consumers tend to move toward animal protein, incorporate more meat and poultry. And again, it's a market for a lot of our different products, not just the muscle cuts, as we call them, that are sent, but also, like I said earlier, the stomach, the intestines, the feet, all of that consumers here are not going to eat in high volumes, and we don't want to necessarily get rid of. And so that's where we're prioritizing at the moment, in addition to safeguarding our trade here in the Western Hemisphere.
Super. I know we're starting to run short on time, so let's leave this on kind of a positive note for the whole panel, and we'll try to get to one question as well. For all of you, in what ways can trade policy better support farmers, producers, and agribusinesses across the hemisphere, particularly small and medium enterprises?
We'll pivot to the organization that represents me.
All right, let's start at that.
I guess, yeah, I can start. So I think, as I said, like there certainly are areas where we think that there will need to be some enhanced cooperation. And I think when we think trade, we think of, are there ways to better harmonize and have some familiarity with certain areas? And so, speaking within, I'll say, the produce space, we've, as I mentioned, like food safety is one area early where, again, we even here at home, the FDA, there has long been challenges in food safety as it relates to produce, and I'm sure as in other areas. And there's certainly a need to bolster it up domestically, but there also has to be some conversation about the import side, because right now it's not on the same level, and that's a challenge, and there are blind spots there. So how do we work with countries, and how do we work with our partners on ways to ensure better, we call it traceability, like if you've got a food safety issue, how can you better trace back more quickly to try to identify areas, and that way we can all assure that there is a safe food supply for everybody. Another area that I know we're thinking from, and I know that Carus's industry too, is around crop protection tools. I mentioned about changing consumer preferences earlier, and a lot of it is around the uses of pesticides and chemicals. And how do we balance that? How do we balance towards wanting to ensure we can protect our crops from pests and diseases while trying to move towards newer innovative tools that are, more sustainable, more effective, use less and be more effective, and how do we work on that? And that will certainly, that's something we have heard as a commonality in talking with some of our industry partners or friends in the North and the South. And so there's a conversation to be had about what are ways that we can usher in new innovation and ensure that the regulations can keep up with that in each country. And then the last area too, which is kind of a micro issue, but certainly ties into the sustainability space that we've seen, is around packaging. I'm sure a lot of you have seen that there's an increasing amount of fresh produce that comes in consumer facing packaging. And there is some consumer standards or demand around that, that's an area where there are some active industry efforts to say, how can we ensure that we're not running into differing standards when it comes to packaging areas, as that becomes an increasing share of what consumers eat in their produce, but also being mindful of some of the other concerns they may have around plastic waste, for example. So those are areas that we hope there will be some good cooperation between all of the growers as they still rightfully try to compete for space on shelves.
Go ahead.
I was just seeing if we had more time. Excellent. To add on to what was mentioned, we're seeing a trend of shifting from the lowest cost wins to the most resilient wins. And in that framework, one of the things that we've got to do is build greater resiliency for our farmers. They need markets. About 40% in the United States of everything that comes out of the ground is destined for a port abroad. And so those farmers need a market to sell their products into, and we've got to work hard at that. Beyond that, even within the borders, they need diverse pathways to make money, value add, right? So an example within the corn and soy industry, making funds through the oils portfolio, or value add through how do we use those commodities in other ways, making plastics, making other types of products. Farmers need an ability to diversify their revenue streams. We also need to definitely get back to the basics. I think Tracy really hit it out of the park when she talked about those frameworks that once existed. They were there for a reason. Having an ability to have science-based, time-bound regulatory frameworks that can be policed and enforced is what we all need. We've gotten away from that, and that's the type of stability that farmers need at times like these.
I'll just add quickly, because we've talked about prioritizing ag trade and the need for markets, but infrastructure is another key component, I think, because we rely on ocean ports, on highways, on trucks, on all of that to move our product, both domestically, but also to foreign markets. And unless we have the most competitive infrastructure in the world, we won't be able to compete anywhere in the world. And so I think that focusing on shoring up our ocean ports, our rail, our highways, streamlining regulations that preclude movement in some of those areas, I think are really critical. That's really critical in order to compete globally. So I would just add infrastructure. And one other point, we talk about agreements themselves, trade agreements, but the administration, this administration, previous ones, there's funding that exists for associations and industries here in the US to access. You apply for this funding with USDA, and you can do market promotion around the world. I think that companies and farm organizations, folks in the ag space should avail themselves of that funding and of those tools to be able to, again, show the value of American ag exports in these foreign markets and in comparison to some of our key competitors.
All right, I believe we might have time for one quick question from the audience. If anyone's brave and wants to raise their hand to introduce yourself and direct it to one of our panelists.
Oh, we get a mic.
Yeah.
Fancy. Hello? Oh, okay. Testing. So I have a question more about, I guess we were talking how the farm industry needs more avenues to sell their products. I'm going to piece together some information, kind of like projects and stuff that I've done in the past year, and labor studies. So I know that there's kind of been a history, difficulty of agriculture getting such things like, and I'll tie it back to trade, but getting such things as like protections from unions and stuff like that, because they've always kind of had cutouts and things like the New Deal. And so my question is, when you have certain distributors, such as like Publix, who buy specifically from certain associate or from certain farms who are certified by an association for labor practices, obviously, you know, those meeting those labor practices, not outsourcing your work and doing all of those things will cause, you know, your prices to increase for the distributor to purchase your product, because, you know, the profit margins are already low for farm, but also in the sense of when you have that increase for distributors who have those agreements of, okay, I'm going to buy from only these farms who meet this requirement from this association, and then you have an increase from, you know, tariffs or whatever other, policies that may incur when you have something that's like the tariff where it's necessary that you have to do it, it's federal law, but then you have something that's more voluntary, like only purchasing from certain farms that meet these labor practices. And so mitigating kind of like that increase in prices and what's going to eventually get to the consumer, how does that impact where the distributor buys from, and also farming practices? Whereas maybe they say, okay, well, we're less competitive than other who maybe don't meet these labor practices and maybe don't have to increase their prices as much, even if it's less moral or whatever it may be. How does that kind of like trade factor in for the internal systems of these farms and farmers?
Maybe I'll take a crack at that, because this is something that certainly within the produce space is a huge challenge, which I think is, if I'm understanding part of the basis of your question, which is when there are buyer and consumer standards and demands and how that gets voluntold to farmers, and then in turn they hopefully get a price premium or some kind of contract guarantee. Because I think any farmer knows, they're like, if you can show me that it's effective and you'll pay me for it, I'll do it. And the challenge is that there will continually be consumer surveys where consumers say, yes, I would absolutely pay more to know that my food is being produced from fair labor or sustainable practices. It doesn't always translate though. And that's part of the challenge, is they will say that they will pay more. It doesn't always translate. And then for our guys, again, my farmers, they're not obviously always talking directly to consumers. They're talking to the buyers and the retailers. And the retailers will say, well, my consumers want the Fair Labor Standards Charter. They want you to co-sign. They want you to do these environmental standards. They want you to commit to no pesticide. They want all of these things. And then the farmer says, okay, and then there's often not there's not if you do this in exchange. So it's difficult because at the same time, they have to stay in these markets and try to be competitive. So you'll have the farmers themselves just try to find ways to absorb that cost and figure out ways that they can still, in other ways, tout their premium, we'll say, to buyers. And that, again, that applies to US, but also certainly you see that from foreign suppliers as well into other countries. So it is a challenge. And I think, and obviously, and tariffs, as you said, that's also out of left field, because that certainly has to come on top of that. So I think it's a difficult, I feel like I'm not answering it very well, but I think you touched on it because you have consumer standards that do often drive up the cost of farming that oftentimes doesn't get reflected in the price. And you still will have, again, I'll say my more biased opinion is, you will have competition from other sources that may not be on the same level, but the retailers can say, well, we think it's on the same level. So therefore you have a US grower at a certain level competing with Mexican, Chilean, Canadian, and that's a challenge. And there hasn't been a good way to address that. And that is a perpetual frustration, we think, in our growers, because they want to do, the consumer is always right. They want to do what they think would be helpful. And again, if they are going to get some kind of pay in exchange for that, but we don't often see that. And so it's often just being told, you need to change this and take more on just to be able to continue to sell to us. And we still also may undercut you with a different product who may or may not have the same standards. So I think that's a question we would love to have better addressed, but that is a challenge from a consumer perspective.
All right. Well, I think that certainly wraps up our time. Thank you to our panelists for being here today and the engagement. There's, like we said, there's never always easy questions for all this. They're complex times, but really appreciated the conversation.
Another round of applause. Thank you again, John. Thank you to all the speakers. And if you don't mind, just right behind you here for a photo. Does that work there? And while we're taking the photos there, just wanted to share before I introduce the next speaker, I know there was a couple of sessions or conversations earlier today about podcasts. So I want to pitch our podcast if you're not already following the Chili Purple Line. And we have our two guests from the podcast here with us today. So the recent podcast of the Purple Line features Laura Maristani from Catch Skills. Wave your hand, dear. So thank you for our Hispanic Heritage Month edition. And then after that, for next month, our next podcast month guest is Jason Leon here in the front row over here with executives and boards. So thank you. It just so happened we recorded the same day with two Puerto Ricans in the house. It just worked out that way. So you never know. But moving on here, we know we're a little bit behind schedule, but if you can please stay with us, and then we will, because the weather is pretty nice, you can join us for a reception in the terrace. So next is Sally Lang, drawing on 15 years of executive branch, congressional, and private practice experience. Sally advises clients on the intersection of international trade law and U.S. public policy. In this capacity, she guides clients through complex strategic decisions regarding regulatory compliance, supply chain resiliency, and overcoming trade barriers. Leveraging experience as a senior government official, Sally counsels clients on cutting-edge trade issues, industrial policy, and other emerging challenges. Sally most recently served as Chief International Trade Counsel to Senate Finance Committee Chair Ron Wyden from Oregon, and Assistant General Counsel in the USTR. And she earned her JD from the University of Virginia School of Law, and she's here also with Akin. Please, a round of applause for Sally. Thank you.
Well, the best part about Akin is I get to work with you ladies. Well, thank you guys so much. I'm going to keep this super brief since I know we're running a little behind schedule. I'm Sally. I work on trade, and I sit in a really unique place at Akin where I'm on the legal side of the house, which, has a lot of legal issues at the moment. But because of my past experience, I've, addressed the policy, the why and the where are we going with trade. And so I thought I'd come up here and talk about sort of three things that may be of interest to this group. One was covered a little bit in the past panel, USMCA, but then also, you're going to get me closer?
The podium is set up for us short people, but let's do the
really
little, just a
fancy.
tad taller for you, dear. Okay, there you go. All right.
USMCA, the question of broader regional integration, and then finally, near and dear to my heart, what should Congress be doing and why are they not doing it? So on USMCA, I think you heard a little bit from the previous panel, we have this question of a review coming up. This was one of Lighthizer big innovations. We're going to review the agreement every 6 years. Of course, USTR is treating this as a full-blown renegotiation. And our trading partners are sort of watching this going, what is this really going to mean for us? USMCA was quite hard to renegotiate. Many of the pieces remained the same, but the pieces that changed were difficult to get there. There were major changes around auto rules of origin. There were major changes on the dairy pieces, and many of those things have never quite come into compliance. So I think we'll see a push around how do we get the three countries to come into compliance, and then we'll see new things that the United States wants around bringing more manufacturing back to the US, and then excluding Chinese content from products coming in from Mexico and Canada. The issue, though, is this is a trilateral agreement. Two other countries need to agree to this plan. And what is the US offering them in return? And I think we don't really know at this juncture what that's going to look like. And one thing I put to this group of people who are thinking about trade, who want to be engaged in this topic, is that I don't think the US government or the Mexican government or the Canadian government has all the answers. I actually think it's going to take creative, interesting ideas from the outside that look at these objectives and say, here are ways that we can push this agreement forward and sustain the parts that are working for our governments and our economies and our workers and our consumers, and push forward and meet some of these objectives going forward. So I would put that to everyone in the room, that this is a place that we all need to work together to have some creative thinking. because I think at the end of the day, USMCA is a huge trading block. It's like $1.6 trillion worth of trade. It's 30% of the GDP. It would be a shame to see it lost over a lack of sort of vigor and intensive thought about how to move the group forward. That gets me to my next point very quickly, which is the broader question of regional integration. I think we're at a really strange place in trade. A lot of things have been lost to the Trump tariffs. We're watching this constant stream of new tariffs coming on board, whether it's the global reciprocal tariffs or the series of Section 232 tariffs. But we're also, and I think it's sort of been missed, the generalized system of preferences has been expired for several years. Many of the other sort of preference programs are either gone at this point or going to go away shortly. The value of the free trade agreements in the region has really been depressed by the tariffs that have been put on place. Like, what's the point of CAFTA-DR if you have additional tariffs on top? And so we're in this very strange place where I think we again need to look at the pieces that are going to be left at the end of this administration and think about how to rebuild regional integration. And I think there could be some strange opportunities here because we've kind of wiped the slate clean to create more efficient programs in the US that help that regional integration. If we aren't looking at separate GSP and AGOA and CBI programs, what are we looking at more broadly? What works more broadly? Or what pieces of each of those programs worked? How do we make them all more efficient or more accessible to businesses in these various countries? I think, in the aftermath of sort of all this change, we may have an opportunity to rebuild things. And the place that this was really sort of put to me is the question of de minimis and CAFTA-DR, right? De minimis was the program in the US where if it was less than $800, you could import it into the US with very little paperwork and no duties. Well, what was the point of CAFTA-DR, which had duty-free treatment for all these textile products, but a lot of labor requirements around them and requirements that had to be fulfilled by the countries? We really devalued CAFTA-DR by allowing de minimis to get so big. How do we right-size those programs and make sure our broader trade policy is working together? And I would say the way that we work through some of those issues and those disparate competing factors is that we push this back to Congress and make Congress really take responsibility for trade in some ways. So you are likely aware that it is the Constitution delegates Congress the power to impose tariffs, not the President of the United States, as well as the broader oversight over trade. And Congress has delegated to the executive branch a number of tariff authorities, which is what we're seeing going on right now. But Congress needs to take a more vigorous role on trade. They tend to have not, because trade is very difficult. It's got a lot of competing politics. It's got a lot of pitfalls. And over the years, Congress has become less and less engaged. But I would argue that by involving Congress, you push the United States to the middle. You have less swings to the right and left on these executive agreements. They reflect a more moderate view on trade, and therefore is probably a better and more durable trade outcome, even if it doesn't reflect every environmental outcome that I would like to see or every business outcome that my Republican colleagues would like to see. It pushes you to a more broadly approved position, or makes you trade off various positions against each other, which is uncomfortable, but pushes you forward. And so I would sort of leave it there as, this executive dominance over trade is partially what's leading us to a breakdown of a lot of these programs and to the broader integration. And we need to push it back into our friends in Congress's hands. And we need to help them with creative solutions to some of these trade problems. And I promised that I would take one question. Yeah.
You have a question for Valerie? Don't be shy. She's a good expert. All right.
Yeah.
Hi, my name's Jasmine. I'm a global leader with CHLI. So something kind of going back to the whole tariffs conversation is that a big narrative around the tariffs were that it would support more American farmers and just companies in general, have we seen consumers kind of go towards that? And then also, how does that affect Congress? If people do decide that they want to support more American farmers, how does that affect foreign policy specifically when talking about trade?
So philosophically, tariffs are going to create a barrier at the border and prevent imports from coming in. And that's going to increase the domestic price of goods. And so our domestic producers are going to have more room to make their products and sell them at a higher price. And so they will have, and if they see that economics over time, you assume production will increase in the domestic market, and there will be this sort of better environment for them to produce products. We haven't, we've been doing this for 6 months. We have not seen enough time to really see what that's going to look like. And at the same time, this administration has not particularly strategically placed those tariffs. They put tariffs on everything. They put tariffs on the inputs to manufacturing and the machinery you need to build a factory and the steel you need to build a factory. And so it's very hard at this juncture to disaggregate the effects. And I think what we'll likely see in the long run is kind of a wash, right? Some people will benefit, some people will not benefit, and their production will actually move overseas because it will be much more effective to be overseas. And we won't really know what the long-term impact is. And I'm going to speak as a Democrat, sorry. It would have been better if we had selected industries that this made sense, that we had chosen industries of the future that we really wanted to focus on, where America might have had a competitive advantage, and sort of said, we're going to use tariffs as a tool in that space. This approach of doing the global tariffs, which the Trump administration has a philosophy for why they want to do that, but that is going to make it very difficult to understand what the overall impact on manufacturing is with these tariffs. All right.
Thank you, Sally.
I'm gonna have you come up here to take a photo with our chairwoman while the next panel comes up and sets up. Don't leave, Sally. You gotta come back and we gotta take a photo. We gotta, make sure that you were here. Up here and then right here. Wherever you want. The photographer, the man with the camera says back here, and then we'll go ahead and get the panelists set up for the next panel.
No, that's okay. Everybody knows, I'm sure. That's okay. Thank you. All right.
So the next we're going to have our last panel here for the day, and then we'll be able to get together for a short little reception.
Thank you. Sorry, when it's late.
No, I think we're all set. Fresh water. There you go. Okay. All right. Okay, so we're going to have the panelists come up for the next discussion. I'd like to introduce the moderator for the discussion. Wady Gaitan is a communications and media professional with over 15 years of experience in U.S. politics. Wady has been a guest speaker at U.S. and international conferences, speaking on U.S. policies and campaigns, voter trends, and professional development as well. He has managed national advocacy campaigns, served on presidential and congressional campaigns, and worked as a media training specialist for members of Congress and national spokespersons. Join me in welcoming Wady Gaitan, and he'll introduce us to the panel. The floor is yours, Wady.
Marianne gave us permission to do the last panel in Spanish, so I hope our panelists are ready for that. That's the one twist that we didn't prepare them on. But thank you, very excited. I mean, this whole conversation on trade, without a doubt, I think is an exciting one. It's one where there's a lot to navigate. There's a lot of questions, and there's different experiences that I think businesses, customers, and investors are having in this space. So we're going to explore that conversation on where trade policies are evolving, how are they reshaping supply chains, influencing business strategies, and guiding those long-term investments. So to be able to have this conversation, we have several panelists here. I'm going to start with Maria Lucia Boyce. She is Vice President of International she's the Vice President of International Policy for Global Public Affairs, bringing more than 25 years of experience in leadership in international trade, customs customs affairs, and cross-border trade. In her current role, she leads the global public affairs team working on Capitol Hill, advocating for UPS's priorities. She leads UPS's government affairs efforts in Latin America and advocates for global policy impacting UPS's small business enterprise. As a policy leader, Maria Lucia participates in different roles, including as co-chair of the Trade Facilitation Committee of the American Businesses Dialogue, representing UPS as a member of the Industry Trade Advisory Committee, 13S's Customs Matters, and Trade Facilitations. Also, she's the chair of the International Trade and Security Policy Committee with the American Trucking Association, among others. In her professional career, Maria Lucia has held different positions and functions in both private and public sectors of the United States, to include U.S. Customs and Border Protection and the Border Trade Alliance. Originally from Bogota, Colombia, Maria Lucia holds a bachelor's degree in finance and international relations from la Universidad Externo de Colombia, and has a certificate from the Harvard Kennedy School of Government for Strategic Management for Regulatory and Compliance Agency. Let's give her a quick round of applause. We also have Jordan. Jordan Dickinson was born and raised in Flint, Michigan, and is a graduate of Michigan State University. He began his career in public service with his hometown Congressman Rep. Dale Kildee, and later served the congressman, raising to the role of Deputy Chief of Staff. In that capacity, Jordan led the legislative department and oversaw policy working on trade, taxes, and manufacturing, supporting the congressman's service in the House and Ways Committee. While working on Capitol Hill, Jordan earned a Master of Science in Energy and Climate from Johns Hopkins University in my hometown of Maryland, right? Yeah. Up in Baltimore. All right, in 2024, he joined the U.S. Department of Energy, newly established Office of Manufacturing and Energy Supply Chains, where he advanced efforts to strengthen American manufacturing and address the vulnerabilities in supply chain management through both analytical tools and capital investment. In March 2025, Jordan became Director of Government Affairs at Target, where he leads the company's engagement on trade policy and global supply chain issues. A round of applause for Jordan joining us. Thank you. All right, and Katie Morley is the Director of Federal and Diplomatic Affairs at Coca-Cola Company, where she leads engagement with U.S. policymakers on global trade, supply chains, tariffs, and economic policies, and serves as a liaison to foreign officials in key international markets. She previously spent nearly 8 years in the U.S. House of Representatives, including as a trade advisor to Congressman Adrian Smith, chairman of the House and Ways Trade Subcommittee. And for Congressman Steve Womack, working on appropriations and fiscal policy. Katie holds a BA in economics and foreign affairs from the University of Virginia and serves on the board of the Washington International Trade Association. Also an applause. Thank you all three for being here. I mean, let's get started with the discussion. Very, again, excited for this one. Maria Lucia, I'm going to start with you. With all the recent changes and announcements, how are businesses adapting? And from your perspective, how are customers at UPS managing the shifts that we're seeing in this space?
Thank you so much. I have to correct you. My name is Maria Luisa.
Maria Luisa.
The only reason I'm correcting is because my grandmother was Maria Luisa, my mom is Maria Luisa, and so I have to keep the tradition.
Of course.
I know they're listening. So no, thank you so much. Thank you for the invitation. It's really an honor and a pleasure to be here. I love that our global leaders are listening to this discussion because there's a lot going on, and to all of you from trade. So definitely, as we heard in the prior presentations and our speaker, trade is changing. And to put it into perspective from a UPS, we move on a daily basis around 5% of or 2% of the world's GDP in our network, and 6% of the United States GDP in our network. So we're moving via plane, via train, via truck, like the song or the movie, I don't know, however you want to talk on that part. And 31% of our customers are small businesses. So definitely we have a view of how things are being implemented. And maybe to bring you a little bit also, if you think about the policy, how does it get implemented? We are at the trenches, meaning that we have to provide the data and the information to the government, get it from our customers to make certain that that we are moving and the information correctly. Sometimes, in many times, pay the tariffs on behalf of our customers, so that because that's part of it, we're the importer of record. And also, we have to make certain that we do it in a timely and accurate manner. And so from that respect, I think it has been a lot of changes. I'm a trade nerd and a customs nerd and a Star Wars nerd. I know I can keep adding on all those first. So the force has been strong in these past 8 months. But I think also, as you read in there, I worked I was at U.S. Customs and Border Protection, and I was also part of the team that implemented what is called the single window at CBP that was making changes on technology, et cetera. And what we're seeing is a lot of changes going back to the basics in terms of enforcement and compliance from trade that were not happening. That's a lot of the changes that we're living in. And we have to remove a little bit of the challenges, manage your social media intake, and don't react by social media, react by what is published in an FRN or a CSMS. I know my colleagues here know that very well, because you might see it in social media, but then you have to look at the details, right? And so specifically to that question, what we're seeing is definitely a change in terms of how compliance is implemented, about what data is being required by governments of when, and that is having an impact on the small businesses because they were using what you heard mentioned, that the minimus, think of the minimus under $800. It was more efficient movement of goods, meaning you have to provide less data, you were moving faster. Now you have to provide more data, and that was a big impact. And then the last thing is also what is expected of the regulatory side, the regulatory agencies, in terms of their response to provide us what is that guidance, so we can go to our customers, for example, sitting here and say, okay, we need now this information, you need to provide us this faster. And it turns out that a lot of people, maybe what is happening, this is where in my former CBP had, we're not providing as much information as was required before. And so that is taking time of that change and implementation. So I'll cut there because I know.
No, thank you for those details. And Jordan, you're a target. You guys are the second largest importer of record in the United States. And while half of the items that you guys are selling are made in America, how is the business responding to the tariff environment?
Well, thank you for number one, having me. Number two, already knowing some of our talking points. So I appreciate that. So just quick overview on Target, and I think it's helpful for context. We're about $110 billion in revenue. We have 2,000 stores, but our stores are only in the United States. So while we are the second largest importer of record, more than half of what we sell in our stores is made in America. We're really dependent on many countries for our sourcing activities. We have about 430,000 employees across the United States. And so really, compared to maybe some of our competitors or other things, we are solely focused on the American consumer, and everything that we source, it comes back to America. So how the tariffs impact us is greatly. So number one, on trying to decipher what's going on in tariffs, that's the hardest part. And all of these different tariff tools that the administration has been using is something that our customs brokers and our people who work on this have never experienced before. How do you at Target, we sell consumer goods. We don't sell missiles. We don't sell cars. We sell plates. We sell frying pans. We sell baskets, right? So a lot of these consumer products, trying to decipher what is the metal part, what's the aluminum part, where did it come from? That's really, really hard compliance. And when there is a new 232 or a new country that comes up, seems like weekly, daily, whatever, it's really hard on our compliance for our team. So I think our teams are starting to say, okay, what sort of information do we need to ask for from our vendors? I think one thing I forgot to mention, Target doesn't manufacture anything. We depend solely on our vendors for all of our manufacturing needs. So what sort of information do we need from them? So we have to make sure when we import it, that we are giving the correct information to CBP. Target has been a long partner with CBP. We're what's known as a trusted trader. We talk with them all the time, but even for us, who probably besides Walmart puts more resources into trade compliance than anyone else, it's a huge burden for us. So I'd say that's number one. Maybe I think something that's a little bit more interesting or cool is, so Target, we think of ourselves as Target, right? We are, and that's something that we really lean into. We want to be new. We want to be fresh. We want to bring you into our stores. We have about 6,000 products we sell in our stores. We change about 10% of our products every single month. Something when every time you come in, you might find something new. So please keep coming to our stores. So what does that mean though, when it comes from trade and sourcing? So when we, if you have a basic t-shirt, we can produce those in millions at a time. But what happens if you want something new, changing with the fashion trends that are going on? That requires a whole new level of complexity. While, we might want to source it from a vendor who can do this, it might be overseas in Asia. So how do we look at maybe a vendor who's closer by where we can make design decisions and updating the product very quickly and get those to our shores within weeks rather than in months? And that's something that we really focus on. But in this changing environment, that's kind of changed our calculus of, okay, not necessarily where's price the only thing, or what is only tariffs, but where can we get the dependability, the quality, the scale? We have more than 100 million customers that come through our stores. We want to make sure that we democratize fashion so it's accessible to everyone, speaking clothes mostly. Where are our vendors? What can they do on the scale that Target needs to supply that? And that simply isn't here in America, that production, that scale. And is that in the Americas? We're exploring that. We've had a conversation to see what else can we do closer to home, but those capabilities might not exist, and maybe they only exist in certain places in the world. And so how tariffs impact that is we're really, as we design, try to bring people into these new cool things, where are our capabilities out there that we can look at, and those not already there. So that's just a new factor we're looking at.
Good overview. Yeah, another company, American company, but with a global presence is Coca-Cola. Katie, at Coca-Cola, what does the supply chain look like here in the United States?
Well, thank you. And what a great panel. We were able to see the logistics, retail, and then a product as well to talk about such an important topic. And thank you to you all for sticking it out. I know we're standing between you and that glass of wine. So it's a pleasure to be here. As you said, Coca-Cola, an iconic American company, proudly an American company. We just celebrated our 139th birthday. But we also have a global presence. And I think it's really important to talk about what our footprint looks like in the United States for our American consumers. Our structure sort of underscores our commitment to providing our American consumers and customers with the products that you all know and love at the prices you expect. Bottled and distributed by American workers, and being able to get as many of those inputs as possible from the United States. With all of those pieces coming together, our economic footprint ends up looking at, we end up contributing $58.7 billion to the US GDP. We support over 860,000 American workers. For every direct Coca-Cola system employee, we add 9 additional supported jobs in our value chain. And then it's very important that not only are we creating products that everyone loves, but that we're giving back to the communities where we're located across all 50 states. And so invest over $127 million in some of these community programs. That being said, like I said, we try and get as much of our inputs and products as possible from the US. We, like all of our markets, we try to make our products in the market that we are selling them. But sometimes there are products that we cannot get, right? And that ends up falling oftentimes into 2 categories. One, where that input is just something that is not grown in the United States. Think about, certain fruits, cacao, coffee, where as much as we would like to, the environment and the climate just isn't suitable for those fruits and agriculture products. The other thing is, and I think Jordan alluded to this a little bit, is that we also need a specific quality and at a specific scale, quantity of certain inputs. So beverage grade aluminum is a very specific aluminum, and we need it at a massive scale. So being able to procure that much aluminum requires us to look towards the outside market. When we do look internationally, we first look to our neighbors north and south of us, look towards the region before looking outside the rest of the world.
All right, thank you. And Jordan, you gave us an in-depth look at sort of the impact that the tariffs and trade is having at the moment, but going a little bit into the priorities coming this year for Target, what would you say are those priorities and what comes next for you folks?
Well, it's changing as the trade landscape is changing. But as Target looks at what our priorities are, is we would like to see some certainty in place. And so we know that there's a lot of stuff coming, and we'd like to make sure that the rules that are set in place are stable so we can plan as a business. We are spending so much time just trying to understand what the administration is trying to do and what is coming and plan for it, that it's hard to plan how to be most efficient as a business. So we are looking at what's going to happen, hopefully with some new trade agreements that are coming forward, which might provide some tariff relief. What will happen in the context of those trade agreements? For example, the rules of origin. Where are things, what are the components that go into a product and what tariff level they're going to see? We're really interested to see that. That's been something that's been teased out in a number of different joint statements. So that's something we're really interested in. We're interested to see how the inclusion processes of the 232. So just in case you aren't following this in your every moment of your life. Yeah, I know you are. I know a lot of people are. So when the administration announces a 232 tariff, let's say on lumber, which was announced recently this week, and they'll decide what the scope is, and then they'll have a public comment period where other entities can say, well, this product wasn't included on your list, I'd like it to be included. And so we are still facing a lot of uncertainty there about what the tariff rates are going to be applied to those products. Coming up today and into tomorrow, obviously the government shutdown, but also the expiration of two important trade programs, the African Growth and Opportunity Act, the Haiti Hope and Help Act, which are both trade preference programs that help make some of these growing economies more competitive, so we can help grow jobs in other places and help stabilize those economies. I could probably go on, but I would, want to also defer to my panelists, what else they're following.
Yeah, Maria Luisa, got it right on the second time. On the operations side, what does the implementation of some of these changes that you mentioned look like? What are the insights that you could share in this front?
So I think it's so interesting that we're sitting here for us talking about the complexity, right? And I think Katie and Jordan were mentioning the complexity of the classification. You have aluminum and steel and derivatives. Our lives changed when the derivatives were included in that respect. And so the complexity is we're also one of the largest customs brokers in the world. And so we're helping on that classification, and is knowing who knew that cosmetics have aluminum in it. And so what percentage, and how do you classify it, and how does that get reported? All of those things, I think that is a complexity operationally that we're seeing, is sitting down with our customers, and we have to map out their supply chain, understand this is the areas where you're going to be implemented. And I want all of you think of 4 buckets. this is how we are looking at how do we break down the complexity. One is USMCA, and I know you have heard a lot about that. The second one, I'm gonna put as a second bucket is China, Hong Kong, and that's a separate one. The third one is the rest of the world, and we'll talk about that. And then the fourth bucket is where I see where we're moving towards in trade policy, which is 232s and 301s. AIPAs are temporary. That's the tariffs. 232s and 301s are here to stay, and they're harder to change because that's a more formal process that you go through. And so within that complexity, the classification, the information, that's what we're leaving from us, from UPS on a daily basis, is how do we sit down and help our customers understand how can they move efficiently in that part, how can they have predictability, what to expect, because for example, also if you're selling clothes and you need yarn that is going to help to produce it, that takes 6 to 8 months. And if things are going to change and the price has been addressed, so that is a challenge. So I think that's one part. I think the second part, we have to do the brokerage. We also have to do the shipping, and then we have to do the distribution. We are connected in all those areas. And so that is the other part in terms of working on the warehouse management of inventory and timing. We are coming to the high peak season, what we call our peak season, right? So how does that get implemented? And so we're having that conversation. And last but not least is all these countries are agreeing to these trade frameworks. What does that mean going from an export perspective from here to there? What to expect also from those countries? And I think that is the other area that we are working with our customers to have a better understanding of what to expect and how best to prepare, right? On how to work. And I'll stop there because I'm a trade nerd, so we can all go deep dive.
Yeah, no, and thank you. You spoke on a lot of the changes that we're seeing, and the conversation of trade isn't just in the forefront now, but it's been in the forefront since the beginning of the year. With all the attention, Katie, I want to ask you that trade is receiving. I mean, what are some of the opportunities that you think is coming out of the fact that trade is front and center?
Yeah, I think you've heard a lot over the course of the day about all the challenges, right, that this aggressive trade agenda has put on companies like ours. But I think it's important to look at some of the silver linings, the opportunities that we should take advantage of. The first is that trade does not operate in a vacuum. And that is something that actually makes it more complicated when you go into the halls of Congress or the White House, right? You're talking about international policy, economic policy, and domestic policy, and it kind of all comes together in a messy way. So the first piece is, if there is this attention and this momentum towards emphasizing domestic production here in the United States, we need to make sure that our workforce is prepared for that. What does our workforce of tomorrow look like? Do they have the skill sets needed? Do they have the career pathways to set them up for success? And are we able to align the needs of industry with the technology and everything else in between to be able to make these products here? So I think there's a really good opportunity to start talking about or to build on that momentum, whether it is, talking about education beyond just a 4-year college degree, towards apprenticeships, internships, technical training and community college programs, and then partnering with the private sector so that those jobs actually exist when you're finished with your education. So that's one opportunity. I think the other opportunity is, and it's difficult from a company perspective, is it does really require companies to look at our supply chains critically. We can't just say, well, we're sourcing it from here because that's what we've been doing and that's the easiest answer, right? Now we have to look at it and say, well, does sourcing from this location, does that make our supply chain the most resilient? Where are the choke points? Where are, the concerns from doing it here versus country A versus country B? And by having that sort of internal practice, we end up creating more stability and certainty for ourselves than the industry and the sector at large, and for the consumers that are buying our products as well.
Thank you. And Jordan, what are some of the strategies that you're seeing at Target or possibly even other companies when it comes from sourcing in the Western Hemisphere? Is there anything that policymakers can do to make that easier for you folks?
Yeah, where should we start? So I think I'll say this first. Target has had an intentional process that started over a decade ago to diversify our supply chains. We've seen the writing on the wall, but this stuff takes a while. Number one, we want to trust our vendors because we want to make sure they're going to show up with the product that they say they do, with the quality, color, whatever else that we produce. So we really do have like a strong relationship with our vendors. That's not easy to just leave them high and dry. We got to think about the workers that we leave in the dust that are no longer being employed. So this has to be an intentional, deliberate process. An example of how we've done diversification is at Target, we sell like mainly two buckets of things. About 60% is our national brands. So think like a Procter and Gamble or a Legos or a Barbie, right? Those, we don't control those. And then we have what we call our private label, our own brands. That's about 40% of our business. And so of that business, we were about 65% penetration in China in 2017. By the end of this year, we'll be less than 25%, which is 4 years ahead of our schedule. So this has taken a long time. We've made a lot of progress, but it's really hard. So we have vendors who have been in the Western Hemisphere. We're also looking at new vendors. I mean, the most obvious thing that they could do to be helpful, number one, is give the CAFTA DR region the same treatment as USMCA. That would make it more cost competitive. But that's not the only way, because the marginal cost and difference on tariffs is only one part of the equation. You also need to make sure that you have a workforce that is talented, skilled, and can meet this quality and scale that we need. So I think having that workforce available in the Western Hemisphere is important. And I'd say like a third area is transportation logistics. We might want to produce in certain areas, but the roads might not be good enough. The ports might not be big enough. I mean, the Panama Canal is having major issues with climate change or drought, whatever the cause is. So that's, all of those things have to work together, because in the end of the day, we have to make sure that our product, or the product that we are sourcing, that the product that the customer comes to our stores and expects, is on the shelf at an affordable price, at a quality they expect to spend their money and their hard value. And what we're seeing, I think this is beyond what you asked, but in the consumer, what we're seeing is someone who is a little bit tepid about wanting to spend money. So we've seen, and if you ask any of our retail partners, a lot more focus on buying essentials and a lot less focus on buying discretionary items. And so we are seeing a customer who's very conscious about value, and we need to make sure that we continue to deliver that to make sure that we are able to sell our products.
I think, and before we open up to questions, Maria Luisa, I did want to ask you, sort of looking forward on the possible policy developments for the next 6 months. What are you focusing on? What are you anticipating? And what advice would you offer for those who are navigating these changes?
So first of all, don't panic. Take a deep breath. And it is important. I think there's three things that I'm focusing on for the next 6 months, and we live on 24 hours at a time, 2 or minutes or hours at a time. But one is USMCA. The USMCA review is going to be very important. It's a review. It is not a renegotiation. Technically, right now, it's not a renegotiation. It's a review. We are seeing a policy where the U.S. has been pushing a lot of 0% duty for USMCA qualified goods, except lumber after last night's proclamation. But they are really building a secure supply chain process between Canada, the US, and Mexico. It's going to be key how those conversations go within the next 6 months. I know the panel before mentioned the review, the FRN, the register notice is out. by January 1st, USTR has to present to Congress, that is to send House Ways and Means and Senate Finance for the students that are learning in Congress. They're going to present what their recommendations are, where the three countries are in agreement or disagreement. And by July 3rd, a commission that is made up of the three countries is going to come up with the recommendations. We are working, our companies, and my company is everywhere. So we have a team in Canada and Mexico. We're following closely that conversation. So I'm following that very closely. The second thing that I'm following is the 232 tariff that are coming out. We have, how do they get implemented? What are the space that they give to find some flexibility for some of the companies to be able to find alternatives in terms of sourcing if they need to make those changes? But also, what is that classification? What is, so the 232 comes out, the announcement is made, and then you still don't react until you read the CSMS from Customs and Border Protection. I'm giving you too much information. I know I probably lost you, but CBP gives them the details about how to program the system so that they can collect the information and you could provide the data. So following closely that 232s. And then the last piece is how this new trade world that we're living, I'm of the school of thought, this is not talking on behalf of my company, this is me personally, but I'm of the school of thought that regardless if it is a new administration, the next administration, I don't think this is going to go back and change. We have changed the way we do business in trade and supply chain. We are really looking at more security, compliance, supply chain. And so what we really have to look at is how, and that we're following closest, what is that conversation? That's where Congress is going to come to the table in terms of having, how do we regulate and look at supply chain and trade moving forward? Trade is not leaving, it's not going, it's just changing the way it's being implemented. So that's something that we need to have in mind. Is not, so when I say don't panic, it's not the end of the world, it's just changing how it is being implemented. And we have to be flexible and adapt to that piece.
Don't panic, be flexible, and a lot of reading and the conversation that will continue. We did want to open up for at least one question from the audience. I saw her hand go up first. I know they're going to bring over a mic.
You're going to go first. You want to take it over?
Go ahead.
Yeah, two quick questions, then we'll go with him and then we'll go with her.
Yeah, Daniel Rosario, CHLI Global Fellow from 2013, I guess. Yeah, but anyways, my question was short and simple. So I've been working with a lot of Dominican manufacturers, so the question is going to be mostly for Jordan. In the context of your diversification of suppliers, what guidance so far can you communicate in that direction for businesses that are operating in Latin America that do want to become your partner somehow? I mean, in DR, I'm sure you've heard a little bit about it so far, what's going on. We have the certifications, talent, we're there, obviously to the scale that you need. I think the challenge for us right now is just access to capital to be able to fulfill the demands of different purchasers here in the US. But wanted to speak about that context specifically.
You want to take the two questions first, the other question?
Oh yeah, let's see if we could hear both questions and then we'll get the answer. So she had her hand up.
So sorry.
Hi, my name is Sofia Giraldo. I'm part of the CHLI Global Leaders Program. My question is very quick. It's leaving aside the tariffs that I know is a really big concern right now. Which other two challenges are this industry facing?
Take that. Jordan, do you want to start?
Okay, I'll try my best. I don't think that target sources from the DR currently, actually was yesterday, Atlantic Council came out with a new report about investment in the DR. So I actually was there just to hear what they had to say. I'd say, how do I want, like, we at Target need to make sure that we can supply products for our 2,000 stores. That is a ton of customers, and we have, so we, I would say, are not generally investing in the capital to start up manufacturing. We would depend on vendors. So even in countries in Central America or even in Haiti, a lot of those vendors have global footprints where they're able to take advantage of the scale and cost efficiencies of, I think like apparel is kind of the easiest thing to think about, but think like, so fabric or yarn right? So I think looking to those global multinational vendors who we've had a long established relationship, even if you had the money and were able to get to the scale and you were a new vendor, it could take you a year plus to get into our system at Target just to prove that you can meet the capabilities and the quality that we need. So I think it's a multifaceted program, and partnering with some of these established vendors might be helpful. Yeah, I think that's probably my best advice on that.
Thank you for that. And Maria Luisa, if you on the question on the challenges.
Regarding the challenges, great question, because everyone loves to talk about tariffs. I think the first one is, as Maria Luisa said, the USMCA, US Mexico Canada agreement. It offers a really great opportunity for us for all three countries, but also for businesses to have that certainty and to show that confidence in that North American corridor and this economy that we have built across the continent. So that would be the first one. And then the second thing is also something that she talked about, which is compliance, right? We are getting with such an aggressive and fast-paced trade agenda, and with these 232, 301, reciprocal tariffs and others all coming at us, CBP and others and the various agencies are all trying to get that down on paper and sent out as quickly as possible. And a lot of it is falling on the companies to make sure that they are complying. And also could be on the hook if they don't do it the right way. So making sure that from a compliance perspective, we are meeting the government with what they are needing would be mine too.
Do you want to address this?
Just, no, I agree. I think very quickly, the other, to add to that part is we need to make certain that the agencies have the resources to be able to respond as fast as feasible. And then on our side, we need more people with knowledge on trade and customs processes. We're hiring a lot of people, and I think it's interesting because you need that type of knowledge and understanding. So if you guys are thinking of a career opportunity, that's always there to do. But that part is important. Very quickly, small and medium-sized businesses, they don't represent a large quantity of export and import, but there's a lot of small and medium-sized businesses here in the country that import to export, and they were impacted very hard by the tariffs. I think that is something that we as UPS are also following closely. How do we allow for the space for them to have the agility so that the bigger companies have the challenge for move and flexibility? For medium and small businesses, we have to work and be more agile. They can do it. There's if the consumer buys it, the small business continues to sell it, but we need to give them that space, and we're looking at that. How do we help them on that process to continue to export?
Thank you to our panelists. If you can join me in giving them a round of applause.
One more quick question for the panelists. Again, to Maria Luisa's point and earlier about keeping up with what's going on. So from a fact-checking standpoint, if we all want to keep up with what's going on with trade, starting with Katie and working our way, what publications, what podcasts, what news, who are the journalists, what do we follow? What are your suggestions?
So I'll give two. The first is I love Politico Trade's newsletter that pops up every morning. It's a really good source of sort of the quick and dirty of what's happening each day, and gives links to full form articles as well. And then also the Washington International Trade Association. I know I'm on the board, but I'm going to do a plug.
Yeah.
They offer memberships for free for students and for government officials or public servants. But they do a ton of seminars, a ton of panels, and they get very in the weeds. And then they also have a new program related to college students and sort of tying trade to other sectors. So fashion, agriculture, you name it. And it really connects you to the DC trade community as well. DC trade community of nerds are very small. So it's a really good networking and education opportunity.
Okay, and then just to add, we do have an Florida International University, Ileana Ross Layton Fellow. Please stand up, dear, who is an intern at that office right now at the WIT. So if you can't connect with Katie, connect with him afterwards. Okay, Jordan, what are your suggestions?
I'm gonna take what you have already said. I read the executive orders like verbatim, and that's the best way to understand it. And if you ever want to go into policy work, like that's actually probably really, really helpful. And it's so confusing and takes forever, but digesting that will really help you understand. So that's my number one answer. And actually that's my only answer because everything else doesn't give you the full context. And so you have to read the source material.
Okay, Maria Luisa?
I think first CBP has an FAQ page where they're updating daily all the information. So if you want to go to the source that's a good source. There's a lot of podcasts. I love the WITA podcast that they have every Friday. It can get very technical, but for the nerds, it's awesome. We love it. There's another podcast that is called Trade Lanes, and you may see it on LinkedIn. Ask me and I'll send you the link because these are from the companies and the experts, and they talk about what they're seeing in high level, 5 minutes or 10 minutes, which is very good. And last but not least, I make certain that you get connected with CHLI because we'll try to do more podcasts or more webinars. I'm offering to do a webinar on trade just to keep you updated on what is going on. UPS, we do actually webinars to nationwide, and we do it in all the regions, in all the languages. But definitely happy to connect because we keep you updated on what is changing and doing. Don't panic, remember. The force is strong within as well. We'll make it through.
All right, so another round of applause for the panelists and for Wadi. Thank you so much. If the panelists can also just please stand for a photo here. And while they do that, I also want to recognize another board member who joined us, Omar Franco in the back. Say hello, dear. Another board member. And thank you again to everyone who joined us in person and also live stream. Just a reminder that we're going to have this all recorded. And then it'll be available on the CHLI YouTube channel afterwards. Within a week or so, we'll get out a recap, and it'll also include any links that any of the speakers, panelists had for everyone. And so thank you again. And as you exit the doors here, make a left and join us at the terrace for our reception. Thank you.
Thank you.